Good morning, everyone. My name is Hadi. I'm the CEO and co-founder of Agora Group, the owner and the host of the Global Blockchain series. I would like to welcome you all with us today. A special thank goes to all of our sponsors, without whom this event could never take place. A special thanks also for all our investors, our delegates, our keynote speakers, including Mr. Mohammed Lebloushi, the Chief Executive Officer of the IFC Innovation Hub, Mr. Andrew Durgi, the Head of Republic Crypto, and Mr. Robbie Young, CEO of Investment at Animoca Brands. Thank you all for being with us today. Agora Group has been delivering the Global Blockchain Congress for 5 years right now. This is the 12th edition of the event in Dubai. We've also launched 2 international editions. One was launched in Southeast Asia last year in Hanoi in Vietnam. And this year we launched the European edition in the UK in London. And hopefully next year we will be launching also a North American edition in the USA. Consistently, we have provided the same model for all of our events since we started. Our congresses are closed-door events that target C-level attendees. We don't sell tickets. People can't buy tickets to attend the event. The attendees are mainly broken down into 2 categories. We have institutional investors in the digital asset space, and the sponsors part of our model is the companies that operate in that space that are looking to raise funds. We focus on pre-arranged and pre-scheduled one-on-one meetings, and this format has produced consistent results throughout the year. For 5 years right now, we have seen companies raise hundreds of millions of dollars by using our platform. We strongly believe that if we get good people together, good results will follow. So our job is to make sure that we bring in great investors in the space and we introduce them to great startups, to great entrepreneurs and great visionaries that are shaping the space and are making an impact. So based on that model and based on our position as connectors between these entities, we are proud to announce that we are launching our own Agora token. This has been in the works for some years right now, and we were developing the model to make sure that there is actually a reason for the token to be issued and there's a good user case for the token. So basically, the token will be used for 2 things. One is to create a pool of money that will mirror the investments that take place at Agora's events. So throughout the last 5 years, we've witnessed some great investment that took place at our event. Some of the biggest names in the industry have raised funds through our platform before they went public. These companies include, companies like Agora, Casper Labs, and Elrond. And if we had mirrored the investment made by our investors in these companies, we could have provided a lot of value for our token holders. So the main purpose of the token will be to mirror the investment that are being done at our event. And the second use case for it is that there are a lot of amazing startups all over the world that don't necessarily have the financial resources to participate at platforms like this through the sponsorship model. So we're going to be running online competition from now on for these startups, and we will have an advisory committee that will look at the applicants and will choose 5 or 10 companies every event that we have, and we will subsidize their participation at the event. So by doing that, we hope that we will greatly increase the quality of our startup section, and that will also lead to more investments that will in turn be paralleled by our fund. So that's basically the token. We are doing a soft launch. We are not doing an official launch yet. We still have to register and make sure that the requirements are fine. But this is just an announcement. We're going to do a private sale hopefully soon, within the next couple of months or so. we would like to talk to you if you guys are interested in that. We'll have a table at the one-to-one meeting, and we'll be more than happy to share some thoughts with you. So thank you very much for being here again. Now I will introduce my colleague, Katie, who will be emceeing the rest of the conference. Thank you once again.
Morning, everyone. Move this here for you. Morning, everyone. I'm Katie. I'm the CEO and founder of Babs. Babs is a boutique Web3 strategy, marketing, and PR firm. We've been working with Hadi and the Agora team for a couple years now. So I just want to say thank you for inviting me to host this event with you today. I think I'm really excited that we're at the end of this year and moving into what seems to be somewhat of a bull run. I think by the time we're really in a bull run, we'll all be kind of in the midst of it and not even know that it's hit. So I'm excited to see what this edition of Agora brings. New conversations, more excitement. The market is picking up. A lot to talk about, a lot to see some really interesting startups that are here. So without further ado, I'm going to invite our first two guests to come up to the stage and have an interesting conversation. Mr. Mohammed Albosi and Nikita Shaddev, the CEO and founder of Luna Media and the Chief Executive Officer of DIFC Innovation Hub. If you guys want to come on up for our first fireside chat.
All right, good morning, everyone. Thank you for being present so early in the morning. It's great to see everyone here, and very exciting about the Agora GBC token. I think it's about time. I've been coming to the Agora conferences since 2018, and it just gets better and better each time. So congratulations, Hadi and the team, on the soft launch of your token. I am honored to be on this fireside discussion with Mohammed Al-Balushi this morning, the CEO of DIFC Innovation Hub. And before we start getting into the discussion, let's start off with a quick introduction. So my name is Nikita Shaddev. I'm the CEO and founder of Luna Media Corp. We house a couple of companies under our umbrella. Our bread and butter is Luna PR. It's a PR agency focused on Web3. We've been around since 2017. I started my crypto career with Huobi Exchange, now HTX, in Singapore back then, and just fell in love with everything that Web3 wasn't even a term then, everything crypto had to offer. I moved to Dubai in 2020 with 5 employees. Today we have 100 employees. The region has been very kind to me. 2 years ago, we acquired Cointelegraph Middle East. We hosted a show on CNBC Arabia called On the Chain. It was the first ever Web3 English show to hit 50 million homes and on CNBC Arabia. And we also we have a foundation. We educate some girls in India and amongst other ventures that we're into. So with that being said, Mohammed, we'd love to know a little bit more about you, quick introduction on yourself and DIFC.
Sure. Good morning, everyone. Just want to make sure that there's enough energy in the room. I'm Mohammed Balushi. I run something called the DIFC Innovation Hub, which stands for Dubai International Financial Center. It's Innovation Center. We are a physical ecosystem that resides within the center that consists of about 800 plus, slightly short of 900 fintech companies, the largest of its kind in the region. But the reason we exist is, I mean, our responsibility is to develop the future of finance for the city of Dubai, the fintech sector for the city of Dubai. DIFC, as some of you might know, is an independent jurisdiction, has its own regulatory body. I mean, our aim is to create a home within the financial center that attracts startups, everyone that is trying to disrupt financial services, like everybody in this room, but also the traditional financial institutions. How I usually say our job is also to ensure that a JP Morgan or a Goldman Sachs is also part of this digital revolution. We also pose a question to conventional institutions and ask them how do they think their institutions would look like 20 years from now, and how we can support them. I think a bit more relative to today's conversation, we have also now been mandated to develop Dubai's AI and Web3 campus, which is going to be a dedicated campus that would purely be focused on companies that are in the AI and Web3 space. And it should be quite significant. It is not fully open yet. It's been announced, but it should, I think, in a couple of months, it should be up and running.
Awesome. You basically answered all my panel questions right there. No, but I have a lot more to dive into deeper. You mentioned Kate, you mentioned that the bull run is coming just towards the end of the year. But I never really felt the bear market in Dubai. And that's what I really loved about this region. It was, despite the price of Bitcoin or cryptocurrencies or the market cap, Dubai has always been so bullish. Even the events, the networking, everyone's involved. You see the same faces in the bear run and the bull run. So what attracts so many people to this region, to Dubai in particular, and why has it always been so optimistic as compared to some of the other regions?
Well, I think it comes from the leadership. Again, I don't want to sound superficial, but I mean, if you look at how progressive Dubai has been and how it capitalizes on the upside or the downside of the market. I mean, it was during COVID that we saw a surge in the economy like never before, and that was again the leadership kind of reacting to what's happening and coming up with policies that are attractive for global investment. We were the first to open. I think so we saw a lot of let's say. Talent move into the market. We saw a lot of course, investments flow into the market. And going back to crypto again, crypto, I think Dubai and the UAE has been very clear in terms of the position that it wants to take. It wants to be a global hub in the space, and it has pushed as much as it can to ensure that the right regulatory frameworks are there, and it's open to such businesses, and it could be a safe haven, I would say, in the right way for such businesses. But again, it all goes back to progressive thinking, I think innovative thinking, and being open to new ideas, new businesses, and that's why you see so many people from the crypto industry moving into Dubai, and so the same goes for other sectors as well. And yes, be it the VC industry, be it the fintech industry, there was a global slowdown, I would say, in the past 12 to 18 months. But I think Dubai continued to thrive. If you look at the population, you look at most of the numbers, I think Dubai has shown its resilience and has actually continued to grow.
Exactly, yeah. And I think it kind of boils down to you can talk the talk, but can you walk the walk? And I think the UAE as a whole has been, very progressive in that sense. It's incredible. I love telling some of my clients and acquaintances that you don't even know that you're using blockchain here. And that's the beauty of it. I think that needs to be reflective in the whole world. When we pay with our Apple Pay, we don't really understand, well, at least I don't understand the technology behind it, and that's what this region has implemented. When we go through the airports, you don't even have to scan your passport. That technology is actually on the blockchain. So I'm really in admiration of that, and I think a lot of regions can learn from that. But what are some of the challenges that we're seeing from this progressive thinking? Of course, you know, with being the first mover, you're always the one to check out the errors first. So, what are some of the challenges?
I think challenges, every year kind of has its own set of challenges. If we go 5 years back, I think there was a lot of ambiguity around all aspects of the future of finance sector, if I may say. Regulation was not clear. There was, of course, shortage of capital being deployed in this sector. There was shortage of talent, access to market. A lot of work has been done. I think access to market is no longer a challenge. There's a lot of corporates are very much open for partnerships. Governments are open to partnerships. And then I think capital is now available. I think globally, if you look at a region that has capital or is attracting capital, it's this part of the world. So even during the tough times, as we just spoke of, I think regulation, yes, we have been very progressive. We have pushed as much as we can. I would still say regulation is somewhat of a challenge, and that's not a local challenge. That's more of a global challenge, specifically for this room and people in this room. I think I think being regulated is one thing, but then even if you are regulated, for you to be able to operate and tap into the conventional banking sector is still a challenge. I mean, crypto guys are over here in the room, and I think for them to have an operating account or a bank account, they would still face a lot of challenges. And I think that those challenges are there. And I'm not saying we are trying to tackle those, but still there is some conservativeness in the market that needs to be addressed. I think the biggest challenge today that I face, and I think the companies that I represent face, is talent. I think it's not that Dubai doesn't have talent or is not able to attract talent. I think it's probably the best place that can attract talent. The issue is the demand is so huge that you have a deficit with what you have. And I think that's a challenge which we're facing right now.
Personally, I'm also facing that challenge with, you know, scaling my business is getting the right talent. So what are you guys doing to combat that?
I think a lot of things, but going back to the, our thing is we are not producers of talent. We're not like India, or we're not like the US that are producing millions every year. I think we have been and we are in the business of importing talent, and I think that's where we realize that, and that's where we're trying to make it as easy as possible for these people to come to Dubai, to live in Dubai, and to kind of enable Dubai as a talent hub. So attractive policies in terms of, I think Dubai is the easiest to onboard people. And then how do you also upskill people? There's a lot of work that we try to do in terms of upskilling, and we work with all the large institutions as well in terms of upskilling. But again, upskilling doesn't happen overnight. Yeah, but you have to try and push. I think and some of the policies like Golden Visa has helped a lot. I think then you had the freelancers visa, which actually allows anyone to operate for anybody globally, but they can be based in Dubai. So I think things like these do help and have helped the industry quite a bit. I shouldn't be saying this, but I think geopolitically what's happening, I think during COVID as well, we've seen a lot of talent move into Dubai. I think so that has somewhat helped. But I think from our perspective, we need to make sure that we give them the right infrastructure, soft infrastructure, hard infrastructure, the right lifestyle, and the right policies. Because one of the things that if you ask people globally, it's how difficult it is for companies to onboard international talent. It's really tough. As much as some jurisdictions claim that they're open to talent, if you go to the grassroots level, you would see that it's far more difficult than it seems.
No, exactly. I mean, the region is so synergistically, coming together from the VC side, it's often compared to the Silicon Valley of the Middle East, or even not even the Middle East, the Silicon Valley of Web3, which is, I think, a very fascinating point. And to become a Silicon Valley of Web3, you need the entire ecosystem. You need strong projects, you need strong people. And I think just with the situation globally, from, you know, kind of still being alive during COVID, and with the SEC kicking all the companies out of the US, it's like kind of everything is just coming into play beautifully. So we really feel like you're at the right place at the right time here in the region, and it's very exciting to see what else is going to come up. And on that note, you know, Web3 is so much more than just crypto, and DIFC is also so much more than Web3. You guys are very much involved in fintech, in AI. Can you elaborate a little bit about some of the initiatives you're taking on other emerging tech aspects?
Sure. So I think like everywhere else, fintech is, let's say, bread and butter for us. And again, going back to what I said initially, I mean, our job is to look at future of finance. What would be driving the future of finance, or how the financial sector would look like 20 years from now. So, and then under it, you've got all different aspects. So in terms of wealth management, what's happening in the wealth management space? How's that being disrupted? Or how can we enable those companies? In the payment space, payments is huge for us. Payments is huge for the UAE in terms of the corridors that it serves. So how can, what can we do in the payment space? How can we develop the right regulatory frameworks? How can we attract the right companies and allow them to operate out of here? And then, of course, you've got the tech for fin, I call them. That is, it's a huge portfolio where a lot of companies provide their solutions to traditional institutions. Because I do a lot of work with all the leading local and global financial institutions, and these guys are on constant search for solutions that can enhance their capability. So be it the Emerson BDs, the Mushrex, everybody's consistently looking for innovative solutions. So how do we bring in startups, the tech for fins, companies that provide technology for financial institutions who could enable these financial institutions to achieve their goals? So we run, of course, accelerator programs, multiple accelerator programs, be it from fintech, and then in fintech, it kind of trickled us down into regtech, Islamic fintech, insurtech. But now we also have AI, we have metaverse, we have sustainability, women empowerment, and just making sure that we've got a right balance. But most importantly, I think one of the things that we're big on is corporate innovation, venture building. If we believe corporates have still not done as much as they should be doing in when it comes to innovation. I think they would usually partner with an accelerator program and do a press release and call themselves innovative, but that's not innovation, and I think they've started to realize it. We want to make sure that corporates have skin into the game. They are investing in these fintech companies, but more importantly, they also kind of understand the culture. So one way to kind of bring that culture into corporates is to kind of push them to develop their own ventures internally. And I think if you, it's timely as well, because all these corporates at their board level, they all are having conversations in terms of what can they, how can they grow, and how can they generate new streams of revenue, and that happens by venture building, and that's where we're doing a lot of work with corporates and encouraging them to develop ventures and kind of constantly innovate, and whatever idea makes sense, then it could be spun off into an entity. But that's one of the things that we're pushing. And again, I think from an investment perspective as well, we ourselves invest into fintechs and Web3 as well. The Dubai Future District Fund, which again, we're a GP, and along with the Dubai Future Foundation, focuses on Web3 and fintech, everything that has to do with future of finance and future economies. The fund has two goals. One is, of course, as a VC, it kind of operates on return on investment basis, but it also has a national mandate in terms of how it's enabling the overall economy and the overall VC industry. And I think it's been doing great so far.
So if a company wants to come into Dubai and work alongside DIFC, do they go to DIFC or DIFC Innovation Hub? And what is more suitable for what situation?
So the way the DIFC works, DIFC has about 5,000 companies overall as DIFC. Innovation Hub, we are the innovation ecosystem of DIFC. That's probably the largest of its kind. It is of the size of 300,000 square feet. In terms of the licensing, anyone that has to do with fintech or innovation or future of finance, that would come to us because that's they would also want to be. But then the licensing authority is the DIFC authority, and of course we are a subsidiary of the DIFC authority. So yeah, anyone that is doing tech, innovation, anything cool can come to us. The boring stuff can go to the DIFC.
And you know what's incredible is DIFC actually, and I'm not sure if it was DIFC or Innovation Hub. I mean, it's all the same under the same roof. But it was amazing. You guys made international headlines with your approval for XRP and TON for usage within your entire 5,000 ecosystem companies. I think that is so forward thinking. You know, I mean, for something like this to take over the first page of the news one morning when I woke up, and that is really commendable. What was your involvement in that?
Well, we've been trying to push. I mean, I still think that regulators should be much more aggressive in their approach. We've been working on kind of developing our regs since 2017, 16, since the day I joined, I guess, the center. But we've been pushing, and I think it's a major achievement for us. I think the more coins the center adds, the more I think the whole ecosystem kind of starts looking into the jurisdiction, and it actually benefits also conventional players that actually want to look at this asset class. But I think the DFSA, given its credibility, given what it does and what it's known for, always wants to make sure that it when it does something, it does it right. And I think having the recent approval of coins is a major milestone, and I'm bullish there will be a lot more, which will further enable the ecosystem.
Just last question is, I wanted to know a little bit about you. How did you get into this, and what does your role entail, and what's your future, what's your mission?
Sure. So I'm actually a banker by background. I carry those cars. I did about 8-9 years in banking, in the likes of Standard Chartered, Barclays. But then I joined the IFC in 2016, end of 2016, when it had started thinking about financial technology and that it wanted to establish a financial innovation hub. And yeah, since that day, I've been part of the journey, and it's been great. My mandate is developing the financial innovation or the fintech or future of finance sector for the city of Dubai, which is quite exciting, I feel. We've seen a lot. As I said, we were 0 companies in 2017. Now we're 800 plus. There used to be hardly any funding back in the day. Now, touch wood, that's not a problem anymore. Tabby, for example, the first fintech unicorn came out of the DIFC Innovation Hub. I still remember Hossam's early days in 2018 when he came with the idea. So I think seeing all of that happen in front of us is quite interesting and commendable. And the kind of impact that it has on the city, I think when we started our fintech journey, which was supposed to cater to startups, because it was mainly startups that were trying to innovate and disrupt, these guys would be coming, a couple of guys or 2 or 3 guys setting up shop, and my friends in the conventional business would make fun of me that these guys are usually very small in size and they hardly contribute anything to the center's growth in terms of job creation. And now, if we look at the numbers, most of our growth is coming from the innovation companies, and our projection is more than 60% of our growth. Growth for us is job creation, GDP impact. More than 60% of our growth is going to come from this sector. So that's quite exciting. Yeah.
I think the impact extends to the entire world. You guys are setting a standard, a bar for other companies to learn from on, what DIFC is doing. You're making headlines, and you sure are doing an incredible job. Thank you so much for speaking with me this morning, and I hope everyone enjoyed our panel, and have a great rest of the day. Thank you, Mohammed Al-Balushi.
Thank you, both of you. I think it could have gone on for probably another half hour. So much good stuff to take away from that. DIFC is really putting their stamp on the region. I think that's so interesting, that kind of Dubai between geopolitics and just the fact that there really isn't a bear market here. Dubai is probably going to be able to become one of those cities, or is one of those cities, and take over other cities that are trying to compete. The US definitely is not leading right now. So many people are leaving, giving regulations, et cetera. So thanks for that great talk from both of you guys. So they're just gonna set up. The next person to come up is going to be Andrew Durgy from Republic Capital, or Crypto, sorry, and he's going to give a keynote on the road to RWAs and why infrastructure matters. So this will be great. This year, I think, was the first conference in the US around real-world assets, so it's a conversation that's definitely coming to the forefront. Looking forward to hearing more from him. Is he here? There he is. Thank you.
All right, thank you for that. Good morning, everybody. Thank you for being here early in the morning, especially those who flew in and are fighting jet lag. So please caffeinate as needed. Special thanks to Agora for putting this incredible event on, and as well to some of our regional partners, GAF Capital and DIFC in particular, who've been really great partners to us. So we're going to be talking about real-world assets, or RWAs, and kind of the infrastructure that we needed to get there, and why we're approaching that state now. Oh, I think I have a clicker over here. Yes. Excellent. All right, great. So my name's Andrew Durgy. I'm president of Republic. I've been in this space for well over a decade. Operational engineer. I was CEO and co-founder of a company called the Coin Tree. We were the first doing multi-sig security and storage for Bitcoin back in 2011, 2012, and 2013. After that, I was in the hedge fund space, running due diligence and fundamental analysis engineering teams for hedge funds, most of which was crypto-specific. Became partner at a firm called TLDR Capital, which was the #1 ICO advisory firm globally, 2016, 17, 18. If you're around then, you probably ran into us. And then I joined Republic in early 2019 to build out what was meant to be the first vertically integrated crypto investment bank. And we finished that integration early last year, and are now moving through this much larger digital merchant bank evolution. I'm head of Republic Crypto. I built that part of the business out. Heavily involved in the capital side. I'm managing director of all the venture funds, and I'm chairman of the board of one of our metaverse spinouts called EveryRealm. Republic itself really focuses on empowering what we believe are the world's most ambitious companies and investors. Before I get into the RWA side of things, we're going to talk more on the infrastructure. And everyone has seen this curve a million times. This is the adoption cycle. But I want to use this as a way to level set where we are in that process. Because everyone is trying to jump forward into all these different areas, but it's important to understand that there's actually fundamental time that takes place to get us to where we need to be. So in order to do that, we're going to take a step back, a step way back, to the 1800s, to radio. And we're going to start to talk about data transfer technologies, and we're going to start with radio as the first example. So radio came around in the 1890s. The first radio transmission took place in like 1896, 1897. It was a transmission across the English Channel done by an Italian, Mr. Marconi. That was the first true wireless transfer of data. It blew everyone's mind. It was amazing. Yet it didn't find its way into commercial viability until nearly 30 years later in the 1920s. You didn't start to see radios in people's homes really until the 1920s. We look at another example like TV. The first demo of TV took place in 1927 in San Francisco. Philo Farnsworth was the inventor of that. He was only 21 at the time. But again, we didn't really see that commercial adoption until the 50s, when in the mid-50s, nearly every home then had a TV at that point. Then we take a big step forward, we look at email. Email was a DARPA project. Ray Tomlinson was the one driving that. Most people here did not get their first email address until somewhere in the mid-90s to late 90s, depending on what your age was. Yet, email was invented in 1969. Right? Again, took almost 30 years before it was commercially viable and found it into everybody's life. And an interesting parallel is when we look at TCP, or TCP/IP, which is the Transfer Control Protocol. That is what the protocol the internet is built on. Right? That is the internet. Also a DARPA project out of 1970, two inventors, Vint and Bob, the ones that drove that through. Again, didn't really find that commercial viability until it was launched with Windows 95, and everyone found their way into the internet in the mid-90s. But there's an interesting parallel to draw, which is in 1983, 13 years after the creation of the internet, standardization took place. TCP became the standard protocol for internet development, right? Now here we are, about 14 years since the creation of Bitcoin, and we're just starting now to see standardization. It's almost an exact parallel to what we saw from the creation of the internet, right? And that's not an accident, right? There's a specific reason that we're seeing a very similar correlation. So when we like kind of draw a comparison of where we are, and where we were in a similar, if you were to draw a parallel between all these other things, radio, TV, email, it'd be like 1903 for radio, or 1940 for TV, or 1983 for the internet. And I hear all the time from people, oh, I missed Bitcoin, I missed the wave. Well, you wouldn't tell people in 1983 that they missed the internet, right? We're right in the middle of that process, right in the middle of the standardization and building the infrastructure for true commercial viability. Everyone wants to be the adoption layer, right? That's what's always seen as kind of the fun space. But fundamentally, we are still in the infrastructure development of this, which is particularly important for real-world assets, because the infrastructure associated with real-world assets has real consequences, whether it's from a regulatory standpoint or from a security standpoint. When we're looking at real-world assets, that infrastructure is fundamental to be able to onboard not only users, but the success of that ultimate product. So where is the adoption layer? Well, something to keep in mind is that every 14-year-old on the planet has only existed in a world where Bitcoin has existed. They are native to that asset class, right? They are native to digital asset classes. They are the adoption layer. Something at Republic, we remind ourselves all the time, that we are building infrastructure for them. We're building the roads, the pipes, the airports, so that they can then build the true adopted products on top of that, right? That's everyone's responsibility in this room, whether you're on the investor side or the development side, to always come back to that introspective concept of that we are building the infrastructure ultimately for them. So what does that mean? Well, adoption takes time, tech takes time. It takes a generational shift. You know, what we're talking about here is actually not really a technology issue, it's a human conditioning problem. It takes a generational shift in order to be able to move a new data transfer technology into the human race, right? It takes 20 to 30 years, and that infrastructure has to be built. Can you speed it up? You can, but only to certain limitations. Now, if anything can speed up, it's blockchain. It's borderless, it's open source, and all coding is done in English. So everyone can touch it, doesn't matter where you are, right? So if there's anything that is going to be able to speed past what has been its normal parameters, it's this particular industry. But ultimately, it still takes that generational movement. So we're in the infrastructure layer. Standardization, on and off ramps, custodial solutions. We're starting to see some scalability and regulatory frameworks, right? And we're in UAE, we're in Dubai, which is like one of the best regulatory environments you can imagine. We have VARA across the street that's continuing to drive regulatory adoption. You have ADDGM up the street as well, just north of here, that's also driving this forward. So you're sitting in the right place at the right time when it comes to the regulatory frameworks. And the regulatory piece is imperative when we look at real-world assets, because real-world assets are inevitably securities, right? And securities have very, very clear frameworks on how they integrate and operate in our everyday lives. So I want to talk now a little bit about infrastructure, but in the traditional sense, when we look at just stocks in general. So if the ability for me to send a stock to anyone in this audience is very, very cumbersome. If I wanted to take a piece of Apple stock and send it to one of you, it's not point and click. It requires a substantial amount of work and almost always involves some level of a broker and some intermediaries, right? So if I want to do that, I need to contact my broker or my financial institution. I have to fill out a whole bunch of paperwork to submit that I want to do a transfer to another individual or another entity. Then I have to get all their information. I have to get all that paperwork then filled out. I have to send that back to the financial institution. Then they have to figure out a way to settle out that transfer and when that settlement takes place. And then finally that request then finally happens. And there's all these intermediaries in the middle and all these other steps and all these people that are involved that all have different goals and different motivations. So it's a very, very cumbersome process, right? This is not like me just sending Bitcoin from here to somebody else. This is a very heavy lift and very difficult to do. That's why you don't often see direct stock transfer. It's just fundamentally difficult with the infrastructure that currently exists in the traditional world. If you're looking at from a more of a stock market environment, you know, you have all these different players. You have primary issuers, you have transfer agents, custodians, you have brokers and market makers, you have secondary markets and insurance that are all different infrastructure providers and make it just possible to do secondary market trading when it comes to just the stock market. And it took decades to build that, decades and decades and decades, and to find a way to optimize this so that retail could actually participate. But now we're starting to see another evolution of that, right? We're starting to see what is going to be the on-chain solution to this. So when we look at transferring a security token or a real-world asset, you're going to start to see very similar infrastructure. You're going to have primary issuers. You may have a transfer agent like a Securitize. You're going to have some type of a custodian like a BitGo and Anchorage. You're going to have a wallet product like MetaMask, and you have a secondary market like INX, right? And more to come. So now we know the winning formula. We know what has to be built from the traditional standpoint, and now we're moving that into this Web3 framework. But that infrastructure has to be in place in order for these real-world assets to be able to transact and thrive, and more importantly, be able to touch retail investors. But then something else happened. On TradFi side, we started to see consolidation. We wanted the ability to do these transactions in a very simple point-and-click manner. So you have your Fidelities and your Charles Schwabs and your TD Ameritrade that started to integrate all of this infrastructure into one roof, right? And by vertically integrating all these pieces, the motivations and goals all became very optimized. So like, for example, traditionally with security tokens, you'd have to work with, say, 5 different vendors. And if you had to work with 5 different vendors to buy this bottle of water, you'd never buy it. You'd have to work with a primary issuer, you'd have to work with a custodian, you'd have to work with a wallet product, you'd have to try to find a transfer agent, you'd have to find a secondary market, and all of them are motivated by different things, right? So they're very disjointed and makes that process very heavy, and ultimately a very friction-forward process. So on the traditional side, you started to see this consolidation and aggregation for optimization, and now we're making that same jump in the digital side. And Republic is a particularly good example of that. Where, for those of you who don't know, we're the largest private primary issuance platform in the world, and there's nobody even close to us. We have our own transfer agents, we have our own custodians, we have our own wallet products, and we have our own secondary market solutions. So that same level of infrastructure being built and then consolidation is now happening on the Web3 and digital side. And now this is where we start to see real-world assets becoming viable. Previous to this, and there'll be others beyond Republic, I'm just using selfishly this as an example, but others are going to come together that are going to create this consolidated, vertically integrated vehicle that will make it very easy for real-world assets to be able to find their way into everybody's home. But it has to be done in this similar framework because you need the motivations to all stay the same. So now you start to see real-world assets. You see tokenized gold, you see tokenized funds, you see tokenized debt, like through Centrifuge, real estate, art, music, sports, film, all now coming on chain for real-world assets, because for the first time, truly this is only within the last couple months, that we now have these vertically integrated platforms that can deliver these products in a compliant way to the rest of the world. So this is incredibly exciting for us. So much so that actually even Republic launched its own security token that's just a batch of all the different companies that we invest in and participate in as an evergreen fund. So when you guys are looking now towards real-world assets, how will that work? How will we interface it? How will it touch the rest of the world? We're now finally at a crossroads where the infrastructure is at a place where that experimentation can actually happen. Still probably going to be a number of years, as you saw through that the adoption curve before we find ourselves where it's in everybody's home, but now this is finally at a point where you, your family, everyone within your circles are finally able to touch these assets in a really unique fashion. So anyway, thank you everybody. Appreciate the time.
Thanks, Andrew. We have a client that's doing real-world assets with IP, so it's very interesting to hear from the investment perspective where that part of the world, where that part of blockchain is moving. So our next panel is going to be moderated by Nikita, again, if you want to come up to the stage. Why crypto companies are warming up to the UAE. I think she knows. Oh, sorry. We're moving the agenda around, it seems. Is there? Oh, sorry. Didn't see that. There's a fire chat. Sorry. You'll come up in a minute. Okay, so I'll look back on the bear market of 2023, and we're going to have Mohammed Elding, I hope I got that right, head of tokenomics, Mo, for a lot easier if I just call you that, for Animoca, and then Robbie Young, head of investment for Animoca. So I think these guys know what they're talking about. Let's welcome them to this stage and hear what they have to say. Thanks.
Sure, let's do it. Good morning, everyone. Great to be here today. Great to see so many faces, familiar and new faces as well. So we'll do a quick round of intros. I'm Mohammed Azzuddin. Nikita, that had to be one of the worst butcherings of my surnames ever, but I'll take it. I'll take it. Where were we? Yep. So I'm head of tokenomics for Animoca Brands. Really, the core focus of what my role is to look at designing tomorrow's economies today, focus on how we can scale, how we can leverage the different aspects of blockchain technology, what assets are on-chain, what assets are off-chain, the different personas or actors within an ecosystem, and try and bind everything together in an economy that can scale over time. So everything that was being spoken about earlier with just how we can tokenize assets, be it real-world assets or not, the different aspects we focus on. I'll hand over to Robbie as well to introduce himself.
Hi, I'm Robbie. Well, Mo does the heavy lifting. I just I just take credit for things. So I oversee investments. As many of you know, we're Animoca Brands, so we're best known as a game company. We have game studios around the world. We make all different kinds of games, from casual mobile games to AAA console-style games. And everything we do is in Web3, and we also do a lot of investing. So we're one of the most active investors in Web3. We have a portfolio of about 500 plus companies now. And personally, I oversee the investment side of the business.
Absolutely. So we're focusing today on a reflection of the bear market. It seems to be that we're slowly coming out of the bear market. So Robbie, for you, the past 12 to 18 months, what have been some of your biggest reflections?
So I think if you think about what we've been through in the last 12 months, I mean, obviously the biggest trend and the biggest discussion has been AI, much to the dismay of all of us in Web3, because we're like, hey, we thought we were in the spotlight for a couple of years, and now everybody's been talking about AI. But I think there's a lot of overlap, frankly, and I think particularly for companies like ourselves in the game industry, we see a lot of utility for AI technology within our organization to help us be more efficient. I mean, one of the more obvious examples, of course, is in the creation of artwork, both 2D and 3D artwork, because in the game industry, the creation of artwork is often one of the major cost centers, because we're constantly on this flywheel of having to create new content for players, because now we're in a permanently online world, and players are constantly consuming content, and so we have to keep creating it. So I think AI is definitely a big trend, and we've also really been focused on running a lean organization, and this is something that we've tried to instill in all our portfolio companies, frankly, since the summer of 2022, that we knew that sort of a bear market was in the offing, both in Web3, but also generally the macroeconomic environment was going to get tough. And so we told everybody, you know, sort of button up your ship and prepare for 12 to 18 months of belt tightening. And so I think now we had that same conversation once again this past summer with our portfolio companies and said, well, you know, we told you last year, prepare for 12 months. Well, you better prepare for another 12 months. But I think fortunately, we're starting to see some softening in the market, you know, since July, at least in terms of the investment market. And I think definitely over the last month, I mean, NFT sales now, we're at, you know, 1.1 billion, I think, in trading. So I think this year is actually turning out, at least in the end, to be quite interesting.
I think with that in mind and sort of consolidating the past 12 to 18 months, what learnings have there been in terms of how we can move forward as an organization?
So I think one of the key strategies that I've been trying to encourage our portfolio companies, apart from the belt tightening, is one of the strategies to continue to growth hack while you're belt tightening is to focus on some of the things that Web3 does really well. And for me, the key has always been interoperability, because I think coming at it from a lens of being historically a game company, we always think about how we can make games more fun and exciting for players. And as some of you know, there was initial backlash from some of the core gaming community to this idea of financialization of games, because I think a lot of people who play games didn't realize that games have always been highly financialized. But I think I've encouraged our studios to focus on this idea of interoperability of content, because it's something, it leans into what Web3 does well. It allows us to provide utility to create network effects. So for example, we have a suite of games which is very near and dear to my heart. We call it the Rev Racing ecosystem, or the Motorverse is the working title for it. And it's basically 3 studios that build racing games. So we have 13 racing games across lots of different genres, whether it's things like Formula E or our own Rev Racing title or MotoGP, etc. And all of these racing games use the same token infrastructure. So you can use the Rev token in all of our games. And we're in the process of linking up all the games so that you can use the same assets, the same playable assets. And I think this is important because if you think about it from the game player's perspective, historically, I love to play racing games, but I need to go and buy a car in this game, and a car in this game, and a car in this game, etc. And then I need to modify 3 different cars, and I need to paint them, and I need to level them up, and all this stuff. And I'm basically playing 4 different games at this, separately at the same time. And now with the Rev ecosystem, I can basically go and buy 1 car, and I can have 1 garage, and I can put all my time and energy into making that the best car, but then I can use it in every game. And I think that this is an innovation which we'll now see as we're bringing down these walls between software applications, that even the Web 2 gamers who are highly anti-crypto because they don't really know what crypto is, will say that's actually really cool, because the idea of being able to just use my car anywhere is a real innovation.
Absolutely, and probably a good segue into, we talk about innovation in the space, and there's lots of innovations in the space. Where else have you seen innovation happening in the last maybe 12 months?
So I think in this respect, one of the projects I think that perhaps we really tried to impress upon people, which was a new direction for us, was thinking about other markets outside of gaming. Through our investment strategy, we invest a lot in other industries that we feel are not only touched by Web3, but where we think we can really make transformational change. And one of those, of course, is the creator economy. And as we looked at the creator economy, because of course Web3 can facilitate those peer-to-peer relationships and reduce friction and really empower creators by essentially giving them a bigger stake in the pie and the economics of the content they create. And we looked at the creator economy, and we asked ourselves, who is actually the biggest segment of the creator economy? And the biggest segment of the creator economy are not YouTube or TikTok or other social media. It's teachers. Because if you think about it, there are more teachers in the world than there are people on social media, frankly. And the one thing that teachers have in common is that if you go to any country in the world, whether it's a highly developed or less developed country, and you ask them, are teachers paid enough? They will say no. It's a universal truth that the human race doesn't seem to pay teachers enough. And so we decided to try to build a Web3-based product to lean into how can we support teachers and education. And so on that note, I'm going to actually kick it back to you, Mo, because Mo has been overseeing, I think, a lot of the innovation specifically in this sector, because it's something near and dear to your heart, and you might want to explain.
So for those that don't know, I was actually in education. I was a high school teacher for 10 years. I have 2 degrees in mathematics and really went into education as my calling. And having joined Animoca Brands 2.5 years ago to found the tokenomics department, a conversation I've had quite closely with Yat was around what can we do around education. And a year and a half ago, just under a year and a half ago, we acquired an edtech platform called TinyTap, which is in the top 10 grossing on App Store, Play Store as well. And I'll probably take maybe a couple of minutes to segue into this. I do think it's important. TinyTap is a Web 2 platform. It really, the core business model around it is parents and schools pay a subscription fee. Content creators, in this case teachers, create gamified learning, and then there's a rev share on the profit based on an algorithm that they have. This is completely Web 2, no blockchain whatsoever. Once we acquired the platform, we thought, well, what can we do to leverage the existing strengths of the TinyTap platform? And we looked at the top grossing games and treated each of them as a business in a conventional sense. And we wrapped up about 80% of the future revenue generated by these revenue generating assets into what we call a PNFT, or a publisher NFT, where the investor coming in becomes a co-publisher to that content. We did an initial sale of 12 NFTs across November and December of last year, where we generated nearly $400,000. 50% of that went to the teachers. So we had a high school teacher who walked away with nearly $38,000. Now, we talk about teachers being underpaid. We had a teacher who walked away with more than her year's salary in a single NFT drop, if we think of it from that perspective. And that really rooted that there is an appetite for this, and also we're at a point where the technology enables us to be able to do this. Fast forward to April of this year, we launched our EDU token on Binance, where up until the launch of meme coin, we were actually we had the largest amount of BNB staked to the launch of EDU, but fundamentally what it really allowed us to do was seed two $10 million funds each, really focused on education from the liquidity that was generated. One is what we call the Global Educators Fund, which allows content creators to essentially apply for grants to be able to create content. But the second one is looking at onboarding the next 100 edtech companies into Web3, where we give anything from grants all the way up to debt equity financing as well. So it's, for us, that's been a game changer, where we've been able to focus on education. We also know, I think that Andrew was referring earlier to the adopters curve, it takes time. Education is one of the oldest industries that exists out there, and it's probably one of the most difficult to shake up, but we know taking it one step at a time, we'll be able to really tap into that creator economy and leverage the different aspects that need to be leveraged using blockchain technology to bring education into the 21st century.
And I think maybe to follow on that, I think one of the things that we've been trying to do is to innovate, but at the same time to do so in a way that doesn't necessarily disrupt completely the way people do things, because we think it's more likely to be adopted if you don't actually make people change their behaviors radically. And so when we came into blockchain originally back in 2017, I think the thesis was, as a game company, the idea of tokenizing in-game currency and virtual items was something that gamers already understood, because gamers buy virtual currency and spend it on virtual stuff. So if we tokenize it, we're not actually asking them to do anything different. In the case of the publisher NFTs for education, again, we're actually just creating a relationship that has existed historically for a long time. You know, anybody who writes a book goes to a publisher and gets an advance on their royalties from the publisher, who then shares future royalties with them. All we do is we essentially tokenize that relationship through the publisher NFT, so the holder of the NFT is in effect the co-publisher, receiving a right to future royalties. But by buying the NFT, they give the teacher an advance on those future royalties. So it's essentially a historic business model enabled by Web3 and facilitated at very low cost, highly low cost. And so I think that's important, because again, we're not asking people to radically change their behaviors, and therefore we think that will lead to more rapid adoption.
Absolutely. I like to use an example just to sort of solidify that point. How many of us remember in, I think, the few years back when Facebook brought out WhatsApp? Quick show of hands, how many of us remember that? How many of us downloaded Telegram or Signal as an alternative? Quick show of hands again. How many of us still use WhatsApp today? And I think that's exactly the challenge that we're speaking about.
Exactly. No, I agree. And so I think, you know, as a company, as we think about how we can be a part in that, you know, as Andrew mentioned, the adoption layer, right? How can we get, you know, Web3 tools into everybody's hands? we're trying to tackle different industries where we think there are huge potential user bases for that adoption, like education, like gaming, entertainment. And I think the latest iteration of that, of course, is our Mochaverse project, because the idea behind the Mochaverse actually started as a kind of an internal discussion of how can we use Web3 tools for our own business, kind of internally, to improve our network. One of the struggles we had when we continued to ramp up our investing activity was we ended up with this massive portfolio of companies, but we wanted to be a really value-add investor and shareholder to our portfolio companies. And it's very hard to do, as many of you who are in the investing business know, because you only have so many hours in the day. So how can we leverage Web3 tools to do that? And so we hit upon this idea of the Mochaverse, which is essentially a way to use NFTs and Web3 tech to link up everybody in our ecosystem to try to harness those network effects. And I don't know, Mo, do you want to talk a little bit about what we've been doing?
Absolutely. So I think it's the glue fundamentally, because we have such a wide portfolio, but our mindset and ethos has always been blue ocean. So it's not just limited to the Animoca ecosystem. It is for the wider Web3 ecosystem. The initial focus has been, again, gaming has been quite big, and we are a gaming company, or we have been a gaming company in the past. I'm not sure what exactly we are today. We're an amalgamation of multiple different things. But when we think about it, it's that front end that allows users to be able to engage and for it to be an easy access point. Everyone understands the Asian airline or the airline loyalty point model, for example. So going for something similar on the front end where I'm able to come in and engage and have access to a wide network of potential activations, but then on the back end as well, and where we get a bit more savvy with Web3 DAOs, and we've probably seen one of the most prominent DAOs in the space has been ApeCoin DAO. And what we've thought, well, how can we leverage some of the ApeCoin that we're holding in a way that enables our community? So we delegated a chunk of ApeCoin initially to the Mochaverse NFT holders, and what we really saw was an assimilation between the Mochaverse NFT holders and the ApeCoin community in coming together from a governance perspective. And that was a proof of concept. Everything, again, I have a mathematics background, so everything is a hypothesis. And how can we put an experiment out and see if it works or if it doesn't work? And we saw that experiment with a bit of friction at the beginning was actually quite successful. So when we think about things, it's a dual-layered approach, where there is the focus on the loyalty on the front end to enable users to come in and take full advantage of the ever-growing Animoca ecosystem, but also on the back end to really engage with those who are focused on the governance side of things as well.
And I think it was important for us to think about how we could create a project that was not specifically linked to a certain content segment, for example. We wanted it to be a generic Web3 infrastructure layer, essentially. And so, with that example, obviously we've delegated lots of ApeCoin, so we have the Mochaverse community participating in the ApeCoin DAO. But on the other hand, for example, we just did an activation with a game called Pixels, and it's a very popular Web3 enabled game. And we brought the whole Mochaverse community in there, and so if you go to Pixels and you play, you'll see tons and tons of Mochaverse players with their own Mocha NFTs as their avatars in the game playing, because we activated the community to go and play the game. And so they not only benefit from spending and earning and all of the leveling up in the game itself, but they also can earn additional rewards and additional kind of credibility for their player histories within their Mochaverse NFTs as well. So I think what we wanted to do was try to figure out how we could abstract this gamification and loyalty across Web3, not just limited to gaming, but in every content category. And that way we can kind of lean into promoting these network effects throughout Web3.
Absolutely, and to add to that as well, we've hit over 100,000 mints on .mocha, which is we have our 8,888 Mochaverse NFTs, but our .mocha NFTs allow a lot more participants to come in. But I think what's a lot more important than that is actually its reputation. One of the biggest things we're missing in the space is a reputation layer. So having the .mocha, which is on-chain, allows you to then start building up reputation based on the different activations that you interact with throughout the Mochaverse ecosystem, if that's just on the gamification side, if it's on the governance side as well. And then as we begin to build up reputation, it really allows us to start persona profiling. You can be a lot more targeted with the different types of activations that we're giving out. From a user acquisition standpoint, it makes a lot more sense because we know the different demographics of users we're going for and the different types of activations that they'll more likely lean into.
So I think maybe we have 1 minute left just to wrap up kind of prognoses for the next, call it 6 months, which is a 5-year plan in crypto. And I think obviously we've seen the price action happening with Bitcoin over the past couple of weeks. And it's amazing how many more people want to buy something that costs $40,000 as opposed to something that costs $36,000. But I think it's important because if we reflect on our portfolio with over 500 investments, I can only think of 2 that actually work directly on Bitcoin. We actually don't do much on Bitcoin. We're mainly, an EVM-compatible business, if you will, because most of the stuff we do is software development in the EVM network. But Bitcoin remains very important to us because it is a macroeconomic indicator similar to interest rates or employment figures or something for our industry more generally. And so I think the macroeconomic indicators are pointing in the right direction. And I do think that the approval in the US of the Bitcoin ETFs, most likely in the first quarter, will have a very dramatic effect. And I'll leave you with one thought for people who are wondering whether or not they actually will get approved. And that is that my understanding is that the estimated fee income from the managing of Bitcoin ETFs is going to be between 10 and 12 billion US dollars a year for those financial services firms managing those ETFs. And given my observations of the US capital markets, I think that's enough incentive that they will get approved.
Thank you, everyone.
Okay, that was absolutely fantastic. One thing about Agora is the content is always spot on. I think the ed tech is very much needed. As a mother, I know this year there's a lack of math teachers around the world, so excited to see what Animoca comes up with in terms of that sector. Thanks, guys. Okay, so now we are going to have a panel discussion. Nikita is going to lead that, so I'll let her come up and do the intro of the different speakers that are going to be a part of it, talking about why crypto companies are warming up to the UAE. If Alex is here, is your panel here? Yeah. There you are. Alex, come on up. For us, everyone that's on that panel will be great. Maher and Saker. Looking forward to hear what you guys talk about. Thanks, everyone.
Okay, hello again. I always love speaking about the UAE, so that's my common denominator today. I'm not going to bore you guys with another introduction to myself, but for those of you who missed it in the first time, in a nutshell, my name is Nikita Sachdev. I'm the CEO and founder of Luna Media Corp, which houses Luna PR, Cointelegraph Middle East, Luna Foundation, and a few other companies. So why don't we start off with a quick introduction with my fellow panelists, and then I'll kick off the questions.
Hi, everyone. I'm Alex. I'm the general manager of Binance here in the region. We've been here for a couple of years now, and I think this is one of our homes for the long term.
Hi, everyone. My name is Faisal. I'm one of the co-founders and the CMO at Crypto Oasis Ventures. I've grown up over here, so this topic is very close to my heart. And over the years, we've been helping bring quite a few of the Web3 companies to the region.
Good morning, everyone. My name is Firas Al-Sadiq. I'm the founder and managing partner of GAF Capital Partners and GAF Labs. GAF Capital being a private investment firm and GAF Labs being a boutique consultancy/advisory firm in the UAE for Web3. Thank you.
Assalamu alaikum warahmatullahi wabarakatuh. Good morning, ladies and gentlemen. Maher Al-Ka'bi. I sit as an independent board member in several companies. One of the prominent one is the Serkal Group. It's a family office for the 165 years. It's actually been instrumental in co-founding the Etisalat, Diwa, Siwa. Those who are living over here would probably know these companies. And first insurance company, Dubai Insurance, Pepsi. We have a vertical which is related to sustainability, completely on waste management, one of the only company in the entire Middle East. All the metrics you see, that's the vertical we manage in terms of OEM. We're the sole agent for Etihad Rail. We've got smart mobilities. I also sit on the board of a lot of other companies. I served as a board of chairman for schools of ISB, which is about 60,000 children locally and internationally. I also happen to sit as well on the Circular Economy Council, which is headed by Her Excellency Mariam Al-Mehri. She's the Minister of Climate Change and Environment, and Abdullah Bantok, he's the Minister of Economy.
Amazing. Fantastic, very strong panel this morning. So why don't we start off with a quick brief onto what made you move here or stay here, for that matter. A lot of people in the last, I mean, you said 165 years, you've been here a very long time. I mean, you're from here. What has made you want to stay in the region when so many people in the last 20 years have left the region? And for the rest of the panelists, what made you move to the region?
If we start with me, I started my career accidentally as a co-founder for one of the tech companies. I'm a software engineer by background. So I used to make games when I was in less than like 8 years old, 9 years old. So when I graduated university, I joined the company as a software engineer. And not very long, I mean, I think probably in a couple of weeks, they decided to make me as a co-founder. I'm trying to shorten the story over here. And then kind of had the luck to join Citibank, which is an international bank over 200 years span, over 100 countries. And there was always an urge for me to go and work in Europe by my group CEO and also in the US, because you got a profile saying, okay, if you're a top talent in the company, these are the top 10 people that we want them really to go abroad. I never had the urge to go and work abroad. I mean, we're talking about 90s, mid-90s, and even early 2000. I think we're rooted over here. I personally want to stay over here. I have my family's over here, so that's more important for me to get a personal growth elsewhere. And you'll probably hear this mostly by most of the Emiratis who are living in UAE. They don't want to really go out. The number of Emiratis who are actually working outside consciously themselves are pretty counted in 10 fingers. Okay, with the exception of those who are delegates in terms of embassy, ambassadors, and consulate. That's a different thing because that's a government role. So people want to stick around over here because you've got an environment which is very conducive. What else do you want when you actually have great leaders in the company and in the country over here? We're very lucky to have them who are actually taking care of the people and the people who come and build this country as well. So you've got an environment that is very welcoming and for people to be here. So that made it difficult for me to go and live anywhere else, to be honest with you. So that's why I want to stay over here. And I used to always tell my group CEO, if I'm going to grow, I'm going to grow over here, and that's it. And this is how my journey was remained over here. Yes, I went outside for doing a lot of projects. I worked in Europe, to be honest with you. I was the head of risk management over there, managing EMEA. But I always wanted to urge to come back over here. So I went to international roles, but I come back, and so forth.
Alex, maybe you can tell us, since you're with Binance, Binance actually set the stage for a lot of companies to move into the region. After Binance, we saw an influx of crypto unicorns and giants enter. What's your story? Did you move with Binance, or were you here before?
No, I was here quite a long time before. I think I moved 2015. And, the lifestyle here is great, but going back to the leadership here, this is why Binance is here. Like, strong decisions by leadership, leadership deploying their ideas and executing. We don't see that often in other places in the world. There's long-term vision, long-term plan. When I was first here, we had the Dubai Blockchain Center was founded. There was a blockchain initiative. Then we had 10x. Now we've got D33. And these seem really ambitious from an outsider coming in. But when you stay here long enough, you see these executed. You see alignment with all the government agencies. You see alignment with the public and private sectors. And so when CZ came here and discussed about having a regional headquarters and aligning with leadership, he saw the vision and he saw the commitment. And I think he had a few good advisors, sort of, explaining that it's not just words; it gets delivered. So Binance now has around 500 people here. It's a strong presence. We understand the regulatory certainty that we have. We see the commitment to Web3 economy. The government here want to move into new economies. We're seeing the numbers of GDP growth, and we want to contribute with the largest blockchain Web3 ecosystem, and we understand network effects. And so by situating here and allowing other people to come here, it's for the greater good.
I want to ask you something. Don't kill me. Say no comment if you don't want to comment. This morning in the news, there's something about Binance and Abu Dhabi. What's going on? Does Binance want to stay in the region? What kind of stance does it want to have here?
So Binance is here in the region and will stay here. We withdrew one license, which is a fund manager license in Abu Dhabi. We weren't using it. We still have a custody license in Abu Dhabi, Cat 3 license, and we have the license through VARA for exchange and brokerage, and we expect to progress that license further.
So it's just the news being dramatic again.
Absolutely.
So Faisal, you have such a large ecosystem of companies here in the UAE internationally and from the region. Why are companies moving to the Middle East? What is so attractive to them?
Well, going back to your last question, I spent a lot of time outside, but the objective was always to come back over here. And one of the reasons for that was, you can blame it on the lifestyle. And during COVID, what the UAE did, which was very different from the rest of the world, was they actually let people live. They enforced the rules when required, and they opened it up for individuals and for the families over here when things got better, instead of the lockdowns that you had in Europe. And what we've seen with the organizations, and like Binance can attest to this, like where else can you hire 500 people in such a short amount of time? Right? Like if you look at Switzerland, if you look at Germany, just getting one visa, it would take you an entire year. And then for that person to find a house, or that entire setup process is such a long period of time. Whereas over here, Binance was up and running in 6 months. And now you've got over 1,800 companies, you've got more than 9,000 people working. It is the biggest ecosystem in Web3 in the world, consolidated into a single space. So you've got the regulation, you've got the lifestyle, you've got Dubai's finally matured as a real estate market as well. So it is the life that is dragging them here, but it's also the regulations. It's also, it's one of, I would say it's one of the only governments that's actually taking a lead from the front instead of, just, come into the country. No, you've had them focusing on the metaverse and then on AI, and then you've got, like even at COP28, there is an entire vertical on Web3. And so it is the focus from the region, it's focus from the leadership, and it's the life.
Yeah, for sure. And that really resonates with my panel in the morning with Mohammed Al-Balushi of DIFC. I want to play a little bit of devil's advocate here, because I love Dubai, and if I don't play devil's advocate, this panel is going to be about why Dubai is so amazing, and we all know that. So when we talk about talent, when we talk about the region being progressive and I guess almost like an incubator for companies to come in, personally, I've also, grown my company from 5 employees to 100 employees, and the rules have changed, along the way. From the visas being, of course, visas are very easy, but then this Emiratization rule came up, And that's tough. We're struggling with that, to find Emiratis that want to work for outside companies, for international companies. That's number one. The tax, the VAT came up, and now possibly the 9% business tax. What are some of the challenges that you foresee for companies that are coming into the region because it's so attractive with the kind of fast-paced environment, these new laws and regulations? And of course, the country needs to do what they need to do to protect the ecosystem here. But what are some of the challenges that you foresee?
Well, some of the challenges, you've just highlighted them yourself, but my only point, and I say the same thing for taxes, I say the same thing for VAT, for real estate, it's still better than anywhere else in the world. So yes, it may be a challenge, but if you go anywhere else, you're going to face bigger and greater challenges.
If I can add to that, if we take an example in comparison to the VAT tax that we have today, as you have mentioned, it's the lowest in the world today, 5%. I mean, we just want to pray that it doesn't go higher, but it's like you go to other countries, 70%, 19% are there. And if you go on top of that, the government, if you go to US, it's much more complicated. Whereas I think she's sitting outside, she's an American over here.
I'm an American citizen, so I feel that pain.
When I'm in the US, you're going to need to pay a federal tax, a state tax as well. So you got double tax over there, right? So it's not easy. And it's even different. They're not even aligned. If you're in New York, it's different tax. If you go to LA, it's a different tax. The only reason we're introducing corporate tax, just for people to know, because a lot of people might not know these things. We all know that the common tax of 15% for the American companies need to be taxed. That was there, right? So US had to really consider, if the American company is going to be taxed 15% and they have to repatriate this tax to their mother company in US, so why shouldn't we take a pie of that? And that would push the decision for the 9% to be there. And the reason we made it 9, because we want to make it lower than the Ireland, which Ireland's 12%. Which is the most conducive environment for people being there. But it's a hub for a technology company. A lot of people know that. So we said, okay, we'll make it lower than 12%. We don't require the tax, but we need to make sure that we get a pie. If a company gonna get taxed over here, we should then pay, because we're trying to create all the infrastructure over here. So that's the reason it came in. So of course, there's a talk, of course, about income tax, whether it's going to happen or not. It's not on the table, but that can be in the future. But if you look at, again, income tax globally, it's mind-boggling. 30%, sometimes 40%, depending on your status, where you are, married, not married, and children, and so forth. So currently, as we speak, it's a very conducive environment from all perspectives. If you do a comparison, far away from any other countries globally today. I'm not saying it because I'm here or I belong to here, but that's a fact. If you put a table, you get to know the benefits.
And if you go offshore, sometimes with the BVI or Cayman, the issue is that you don't get the ecosystem that you actually get over here. That these are just companies that you can incorporate, and then what else comes out of it. So makes sense, especially as a U.S. citizen. Makes a lot of sense. For us,
double advocate worked.
Yeah, I'm just playing devil advocate. I just want to make it a bit spicy for the audience. So for us, I want to talk about the reason why Dubai has been coined the Silicon Valley of Web3. Of course, there's a lot of family offices, sovereign funds in the region that are now investing in Web3 heavily. Dubai seems, the UAE has seemed to kind of work towards a shift from being, pioneers of oil and gas to tech, to the forefront of finance and technology, which I think is fascinating. What trends are you noticing here in the region? And another spicy question: why do I hear so many times from people coming internationally into the region that that Dubai has a bit of a superficial kind of environment when it comes to VCs? And I contradict that personally. This is not like my own viewpoint. I just want to know, why is there that stigma?
Okay, so great two questions. I'll go with the first question, which was more about what is trendy in Dubai, why are people coming over here? So we're all humans, right? And for a human, they would have basic needs and basic requirements to live and move in a country. As my colleague panelist just mentioned, there's a lot of basic needs, such as super high healthcare, I was just in the UK, had a very, I witnessed an experience in which a colleague of mine at work got a small issue, and we admitted him to the hospital and to the emergency. It took him 4 hours just to see a nurse. In the UAE, for example, if you get a small cut on your hand, you can go to ICU and you'll have the best treatment. Other than the basic needs, such as education, such as government support, accelerator programs, a lot of different hubs that are over here, you have extremely low taxes. I was reading a statistic actually yesterday where in Germany, if you have an income of, for example, $1 million a year or euros a year, you're paying about 490,000 euros or dollars a year on taxes. So that's about 49%. Over here, you're basically paying nothing. Other than these basic fundamentals and needs of a human to be comfortable and feel secure to be over here, Dubai has also attracted, or the UAE actually has attracted itself to being the global hub of BD. This is where what I see UAE playing a key role as. It's number one, centered in a perfect location around the world. So it's in the middle of so many different time zones, so many different locations between Europe and Asia and what so. A lot of people feel welcome over here. They do a lot of partnerships, collaborations, announcements that all come from over here. You would see a lot of US companies wanting to meet Asia, for example. They'd meet them over here and do a lot of different stuff. It becomes a lot easier. So that was, I believe, your first question. The second question was about the VCs and raising of capital over here. And I've heard that actually before, and something that I always mention to a lot of companies, whether large or small or medium, is that do not expect to come into the region and raise capital like this. This is the number one aspect. I heard so many companies, for the first time, they step into the UAE, they plan a 1-week trip, and in that 1-week trip, they fail to raise capital, and they leave and they say, oh, Dubai or UAE, there's no funds, there's no capital. This is not the way you raise capital. You have to have a market entry strategy. You have to build trust with these investors. Dubai or the UAE is not what people perceive us as we just throw money. No, it's very smart money. It's hard work and earned money. And for them to raise capital, there has to be a full strategy. The country, the economy, the people of the country, the funds that are over here need to trust, need to understand, need to be educated, need to interact and build a relationship before you raise capital. Yes, for example, if you're a US company based in the US, you raise capital quite quicker because you're part of that ecosystem. But for you to raise capital from over here, I always say build a relationship with the ecosystem, be part of the ecosystem, come 4 or 5 times within that 2-month period, meet the people before you even raise the question of are you investing or do you want to invest in these companies?
That's very true. I mean, and this region in particular is very relationship focused. And I think that it's a very positive trait because some of the best investors in the world have the saying to invest in people rather than projects. And by building these relationships, you get to understand the character of the person that you're investing in. You know, so earlier this morning, I was speaking to Mr. Mohammed Al-Balushi about the UAE as well, about Dubai in particular. And he was saying one of the reasons a lot of companies have come into the region is because of some geopolitical circumstances that have kind of pushed them into a region where they feel safe and secure and can still thrive. In the US, nothing so geopolitical, but rather it's the SEC that's causing a crackdown on a lot of companies to kind of leave the region. But you know, and people, I don't think Gary Gensler is very loved anymore from the crypto community. What happens once he leaves, once the SEC does become crypto friendly? Eventually, I believe they will. What happens when, you know, the geopolitical issues kind of settle down? Will crypto companies still want to come into the region? Are they going to go back? Are we still going to, you know, and if there is a slowdown, what are we going to have to do to retain these companies?
I'd like to kick it off maybe very quickly. So one thing that UAE is leading at is regulation by education. So where do you see around the whole world regulators doing meetups, conferences, meeting the startups, going for coffee, tea, food, lunches, and dinners with different startups and projects? It's very hard to find regulators actually fighting and educating and supporting all these companies. So that, I think, is a key differentiator between us and the rest of the world. I've seen Vara in almost every single event, talking to startups, meeting small, medium, and large enterprises, educating them on what are the next best steps. Other than that, I don't see us as any more fearful of other countries. We have built the reputation, we have proven ourselves over and over and over again in terms of being the #1 leaders in the industry, and any industry we focus at, we can achieve. We have an initiation to have 30,000 employees in the AI space by 2030. And that also has blockchain related to it and a lot of different elements. Which country around the world has said something like this or made a benchmark for us to do this?
Which country even has a ministry of AI?
Exactly. So I'll leave that for the rest.
If I can. So for us, because of helping companies move with helping them with the licensing, we've seen any issues that happen around the world, you see those companies flocking to the UAE. But one thing you have to, and I'm sure all of us have heard of this, that people move to the UAE with hearsay. Like, this is what it's going to be like, this is how the people are, this is how life is, this is how the regulations are, this is how the licensing is. But I can count out 50 people right now that came here for a couple of years, and they've been here for a decade now. Right? You come in with a plan, but because of how you stay here, because of how life is here, and because of the communities and the ecosystem, people end up staying. So I'm not worried at all about the ones that are here that are going to leave. Maybe there is a slowdown in newer organizations coming, but the ones that are here are going to stay.
Yeah, just to follow on, I mean, if we look at D33, it's not just about Web3, it's about AI, it's about many other verticals, sustainability. And so, that cumulative effect of all these other industries, the infrastructure being built for that, makes the Dubai UAE a very attractive proposition. It'll be driving from the front rather than worrying about people exiting. That won't be the worry. It'll probably be a worry of, do we have enough infrastructure for people to keep coming? Because the track record is there, and then when we're building, and we've got the education system, the healthcare system, the roads, the train, where else would you relocate to? The other jurisdictions are not issuing visas. They don't have the infrastructure. We move to Hong Kong and have a bedroom the size of a matchbox. It's just not what people need.
I think it's a very good question you've asked. I'll take backwards, go to 52 years ago. If you look at the leadership who built the country, they founded the country, His Highness Sheikh Zayed bin Sultan Al Nahyan, the late founder, may Allah bless his soul. Their mission was, how do I make my country progressive all the time? And yesterday I was in a panel in the Ministry of Education, and I happened to have the flashcard of 1960s and 70s and 80s and 90s. And over there, he was trying to make sure the education is #1, healthcare is #2, and make sure, how do we make sure the people in UAE are happy? So this is not whatever we see today as an infrastructure, or the build-up is happening, or the strategy we're doing, or becoming progressive. It's not from today. It's actually been born since 2 years ago. So there is a consistent approach of making this progress. So you've got government come and gone, you've got PM come and gone in else part of the world. People have kind of said many other things are going to happen, but they're not really lasted. For us, we've been progressing like this for the last 52 years. We just celebrated the birth of the country. So it's a very consistent approach, and that emanates from our faith, that whoever is in this land, we have to take care of them. And we have to make sure, because we believe everyone is staying over here, we're responsible for them. So when you have a mindset like that, a country which is forward-looking and always progressive, and if you look at every 10 years of this country has been progressing like that. I remember when the first, His Highness Sheikh Mohammed bin Rashid said, I want to go and make Dubai the e-government, we need to start e-government, somewhere in 1997. And it was in Jumeirah Hotel, and he brought N-1, N-2, N-3. And he told them, whoever is with us, fantastic, because this is a shift that we're going to have in 5 years. And whoever is not going to be in this journey, because I expect a lot of you not tech savvy or feel it difficult, we respect you for your services, but resign. Some people resigned. And when that happened, then you had Smart Dubai came in, and then you have 3X came in, then 10X came in, now D33 came in. So you could see that this is happening since ever. So yes, there will be other people coming up with new things, and US things gonna happen better. Good, that's excellent. But the ecosystem over here will continue to grow. It's not gonna stay as it is. It will continue to grow. So today we have D33, God knows tomorrow what's gonna be there.
And there's so many initiatives being taken place to not only foster those that are coming into the country, but also nurture those that are born here, will be raised here, instead of, while I was asking initially what got you to stay here or what made you move here, more so I was interested in what made you stay here, because there are so many citizens that will go abroad for education, and now you're seeing the nation is bringing the education here. You have NYU in Abu Dhabi, incredible campus. The professors are coming from abroad into the region. So the UAE is providing every resource required for a successful next generation, for generation to stay here, and for hopefully more unicorns, homegrown unicorns, entrepreneurs to come out of the region rather from abroad and then come and set up shop here. And I really do hope to see more of that in the next decade or so. More unicorns, more entrepreneurs, more innovation coming out of this region, and I'm sure we will see that. On that last note,
I know we are out of time, but given you mentioned about unicorns, I know we're relatively very small population, and I apologize for my voice today, it's really gone. And what Mohammed Balushi missing, or probably did not mention, the IFC itself, they launched the launchpad of Venture Studios. And Venture Studios somewhere started in 1995 in US. And we launched just a year ago, and the mission was within 5 years, we will create 8,000 jobs, we will attract $4 billion, and we will have 120 venture studios will come established, 200 companies will get in the 5 years, and 10 unicorns will come up. In the first year itself, we created 238 companies from that establishment, from the venture studios. And venture studios only been scaling up in the last 5 years, although it started in 1995 by someone called Bill Gross in the US. But that tells you how progressive things are happening. And as we grow, the Emirati talent, we're also a minority in UAE, right? You mentioned about Emiratization and all this thing, because we need to take care of the Emiratis as well. So we're about 1 million people, okay, so around 900,000 something. Of course, the working force will be around 450,000 people. And the development of the young talent is amazing. Like, for example, my daughter, she's still in grade 12, but she's been selected by Houston to go and do for 1 week over there in NASA because of the competition. And she had the competition, she was #1. So there's a lot of development happening from the Emirati talents. We do have an academy within the group itself. So we actually come and teach children, our family children and so forth, from the age of 14 to 18, just to develop them. And you would be amazed the amount of talent now coming up. It's huge. So as we grow in numbers, you'll see the impact of them as well being happening in the country.
That's amazing. And congrats to your daughter. I'm actually from Houston, but not a very exciting city, unfortunately. On a final note, just one piece of advice, a quick one-liner on what you have for the audience that have recently moved here or are thinking about moving here.
I'll go to what he has mentioned. What's his name? Firas, mashallah. I think the key point, what he's mentioned over here, build trust with people. We're not a business, we're not people off to throw money away as people may think outside. We're all about working with us, get to know us. We would like to know the people, we'd like to know whether it's a startup company or investors. Once you build the trust, it'll be important for you to move forward. Get to know the ecosystem. Get to know the regulation, because the regulation will keep on changing and will be forward-looking as well. So for the betterment of the country, for the companies, and so forth. So keep on, these three things are key, to be honest with you, from my humble opinion.
Other than what he just mentioned, I totally agree 100% with all the points. Another point I would like to add is probably find a key local partner. Find a partner who understands this, who can accelerate your objectives, help you navigate through the ecosystem, and introduce you to the right people so that your time is not wasted, your energy, resources, and what. So finding a local partner also to achieve your KPIs and objectives is quite important. Thank you.
So we call the regional ecosystem, like lovingly, we call it the crypto oasis. Again, so you've got Silicon Valley to Crypto Oasis. And the way we've seen the growth happen in the past 2 years, it's been phenomenal. And my only advice is, like, it's just getting started. Because now with the regulations coming in, and after Venom, IOTA setting up their foundation in Abu Dhabi, it's just getting started.
Yeah, obviously we're all in agreement here, but success is not overnight, right? It's relationships take a long time to bed in, to understand the market. It takes time. So, come to be successful, but don't expect it overnight.
Yeah, and I think just to put it all together, it's very important to understand the culture here before you come into the region. Don't be oblivious and get to know where you are a little bit, and I think that goes a long way. Thank you so much to all my panelists. I hope you enjoyed our panel, and thank you.
Thank you, guys. It's always so interesting to learn more about the region. One of the things that I think is super interesting is how ahead the UAE is in terms of regulation. So as Faraz said, if you start early, you're always going to be ahead of the curve, right? Our next keynote is going to be a presentation about the global currency of the future. This is very much aligned with what we've been talking about in terms of real-world assets. So without further ado, let's welcome John Vakis, the CEO of IPMB, to the stage. Thank you. I already have this.
I'll just give you that. One second. Hello, everyone. Thank you, Agora, and thank you, Dubai, and thank you for having us here. We're here today to introduce IPMB, International Precious Metals Bullion. There's a big statement ahead of you, the global currency of the future. Before we begin the presentation, I just want you to know that IPMB is a real-world business. We're involved in the gold business. We mine, we process, we refine, we export, we stamp, and we supply banks, family offices, funds, and we provide access to gold for all demographics. Where's You got the clicker? Yeah. Okay. Thank you. Why do we love gold? I'm sure you've all seen some of this before. In 1912, a certain gentleman here, J.P. Morgan, put an idea out there that was actually the reality of the time. Gold is money. gold is the only native currency, the only native global currency that can be used and that is accepted all around the world. There is nothing else, no other commodity, no other product that can replace the acknowledgement and the value of gold. It's been around for thousands of years, and we are here today to adapt it for another thousands of years using our blockchain technology and all the developments provided by many of you here today. The gold market is a multi-trillion-dollar market. Whether you're in London, in New York, in Tokyo, all governments, family offices, pension funds rely on the stability, rely on the value generation of gold, and it's part of every investment vehicle that we have today. So IPMB is trying to resolve a lot of the problems with giving everyone access to gold. There's problems with the blockchain, there's problems with physical gold. So IPMB is here today to answer those questions. As individuals, sometimes it's tricky to access gold, to buy gold. You might want to keep it under your bed. It might help you sleep at night, or it might make you a little bit nervous. So we're here to answer that for you by providing a custodian facility, by storing the gold for you, free of charge. And at the same time, you might be worried about blockchain. You might be worried about certain tokens that claim to be asset-backed but aren't. IPMB and its NFT in the ecosystem are fully backed one-to-one with physical investment-grade gold, which are stored in London, in Singapore, and soon in one of our own vaults in Europe. So we're trying to resolve the issues of digitizing gold using the blockchain. So we've created an ecosystem that basically covers all aspects, covers all your concerns, and allows you to invest and hold gold as a way of saving, but also as a way of spending. So we engage with global companies, we engage with global certification institutions, we insure all our product, we certify all our products, and more so, all our products are audited monthly to show how much gold is in the system, so you know where your gold is being held and how much gold there is in the ecosystem. So we're being completely transparent, trying to provide a way forward for everyone to access the benefits of gold. IPMB is a two-token ecosystem. IPMB itself is a utility token. It does everything Bitcoin can do. So long story short, it is an exchangeable, it is a currency, it's a utility token, it provides certain advantages. It has the unlimited price action that many speculators want, but more to the point, the downside is limited and flawed by gold. In other words, IPMB you cannot lose value below the price of gold. At the same time, GEM is our NFT stablecoin. GEM is effectively directly linked to 1 gram of gold. It is physically redeemable. If you hold GEMs for a period of 12 months, you can redeem your physical gold, so it will follow the price of gold. And if you hold it for a period of 12 months, you can quite literally walk into the vault with your phone, with your digital wallet, disclose your address, and you can literally walk out with your gold. Whether it's 100 grams, whether it's 1 kilo, it's really your decision. It will become part of your investment portfolio. Alongside this, one of the biggest issues that the gold industry has, precious metals generally, is sourcing of gold material. So all our gold is compliant gold. We're the only product, we're the only company that can tell you exactly where your gold has come from. We developed, alongside our token, Gold Trace 360. Gold Trace 360 is a fully ESG compliant product that runs alongside our token, and it can actually tell you exactly which hole your gold came from, which mine it came from, who smelted it, where it was refined, where it's being stored. So if you go today to any bullion dealer, be it London, be it New York, and you go and buy a bar of gold, they will tell you it's compliant. If you ask them where did it come from, they won't be able to tell you that. If you ask them who smelted it, which mine it came from, which village, which miners touched this gold, they won't be able to tell you. So this is the first product that allows you to actually know the source of your metal. So you can be proud to know exactly where it's come from, how it was mined, environmentally friendly processes, no mercury, no chlorination. So that's something we're working on at the moment, but Gold Trace is today the only fully ESG compliant blockchain product that can tell you everything about your gold and where it's come from. So IPMB is one-to-one with physical metal. One IPMB token is 1 gram of gold. The way it works effectively is that as the price of IPMB rises, you can speculate and stay in the coin, or you always have the option from IPMB to switch to the GEM NFT. The GEM NFT means that you're now allocated physical gold. You are backed by gold. The title of the gold now belongs to you. So if you buy IPMBs at $100 a token, and they rise to $1,000, you can now switch to $100,000 of GEM. And if you hold that token, the GEM token for 1 year, you can collect your $100,000 of gold physically in your hands. So this is quite a large game changer for the industry. GEM as a stable coin will follow the price of gold. It also gives you the advantage of being free to store, free to insure, and free to manage. So if you have gold in an ETF and you're paying 2% or 3% a year, and you're hoping every year that the price of gold will go up, so you may as well switch to GEM and save yourself all the costs and just keep the gold. This will be available for you later. I won't go through each point, but I think you understand now that we've kind of allowed ourselves to use the word disruptive for the gold industry. For the first time, you'll be able to have access to physical gold from your digital wallet. For the first time, you'll be able to earn rewards on your stablecoin of gold. Those rewards, by the way, are payable in more gold at the end of every 12 months. So we have a full security, you have full access. You can use the IPMB token as your currency, exchangeable into anything, whether it's fiat. You can exchange it back into gold. You can exchange it into Bitcoin. So whichever way that you intend to use it, the objective here is to make it globally useful for everyone. It doesn't matter how rich, how poor, or where you are, you can have instant access to something valuable, recognizable, and where you can see the price globally at an instant. So these are more reasons of why we should follow IPMB. Um, on average, unlike many other gold tokens, we heard earlier today about Paxos G, Paxos Gold. There's also Tether Gold, the two most recognizable gold-related tokens. But those are not gold businesses. Those are technology businesses. Their income is derived from US Treasuries and T-bonds, and the yield derived from those investments goes to the owners. It doesn't go to the owners of the token. In our case, all the profits we make on the ground by trading gold, mining gold, refining gold, are distributed up to the GEM token holders. So every year you will receive, as a GEM owner, a gold deposit on your current holdings. So this is actually the only vertically integrated gold business that's in existence today. From the mine to the cloud, this is the only native global currency that exists today. We're non-political. We don't get involved with financial products per se, even though some of you may say this is a financial product, but we are digitizing a physical business, and everyone stands to gain by being part of it. More benefits. So if you're a holder of IPMB, depending on how long you hold your tokens, you will get a discount on your gold, on your GEM, when you choose to switch from the utility token to the GEM NFT. So the longer you hold it effectively, the bigger the discount you get on the gold. So if I switch my 100 grams of IPMBs, I will get 111 grams in a year's time of GEM tokens. And then once I hold my GEM tokens, every year after that, I will get another 10 grams per year every year. This will be variable depending on our operations on your GEM token. So effectively, the GEM is a savings and the IPMB is your currency. So if you want to be completely safe and you want to park your money, grandma is going to put a little nest egg somewhere. She can put it into GEM, or our speculators are Bitcoin, cowboys, etc. You can jump into IPMB and trade it and follow the price up. And again, even with IPMB, as I say, it's floored by gold. So the price of IPMB can never go, you will never lose the value below the value of gold. IPMB is basically limited to 200 million tokens. No more will be minted. There will, of course, be fractioned at some point, but we're keeping the supply limited. And on the other hand, GEM will be minted every time someone wants to invest in gold and buy a GEM. We will back it by gold, and they will receive their NFT. So GEMs will be unlimited, and IPMBs will be limited to 200 million tokens distributed across the world. Special offer for this week for Dubai, for Agora. So investors today, we are currently trading, having launched just about a month ago, 30 days. We're currently trading around the 92 mark. We're offering a special offer here, OTC, which you can take part at the counter. Reduced pricing on IPMB tokens. So it's an easy way for you to enter into the ecosystem and enjoy the benefits as you go along. In summary, I just want to remind you of one little thing. Every time we look at a Bitcoin image, it's usually a very sexy, shiny gold coin. We are extremely pleased with the advances that blockchain and Bitcoin as a product have opened and have brought. And by necessity, by human nature, we want to associate Bitcoin, even though it's a bit of software, we want to associate it with something real. We want to associate it with something of value, something we can touch. So we paint it gold and we give images of gold coins. IPMB is real. IPMB is tangible. It's real gold. You can own it today. And we are taking on a lot of adoption across Africa because they recognize the value of gold. We are a regulated company as well. We are a VASP, and we also now have a FINMA SRO license from Switzerland. We'll be launching on the 23rd of December on Bitmart, and then after that onto 5 other exchanges over the next 4 months. Hope you join us on the journey. Thank you.
Okay, let's move on to the next presentation by another startup, CrowdPoint. If they're here, come on up.
Good morning, everyone. I just want to note really quick that I'm not responsible for clearing out the room. It's a little light here. So that was done before I arrived. But it's a pleasure to be here. Hadi, Abdu, Ubay, thanks so much for having me again. It was great to be with Agora in London and then be here as well. So thank you for putting together this great event. So my company is called CrowdPoint. My name is Nidab, but everybody calls me Nidhi. I'm the co-founder, president, and chief operating officer of CrowdPoint. So what is the problem today in technology? The problem is that in today's information age, we have a data sharing dilemma. And that's characterized by monopolistic corporations that promote surveillance capitalism and stifle innovation. Current centralized systems simply no longer are effective, and society is turning to democratized market networks to address these challenges. We need a better way to organize and connect users and their data. Top-down control is no longer effective, and society is forming democratized market networks to meet these challenges. What is the solution? You empower the crowd, and you do that through technology. I'm going to turn to my friend Eric Schmidt to reference how you empower the crowd and what that means for the future of technology.
So one of the reasons why our industry is so tough is that just when you sort of figured it out, the rules change again. So I'll give you a simple example. If you went to business school, and I didn't, but I teach at business school, you would have been taught, build a great product, organize a sales force, you and I talked about this in my previous roles, sell it to the customer, charge a fair price, make the customer happy. Seems like that's what business is about, right? That strategy is insufficiently scalable in a global market that's all interconnected. So in other words, it sounds like a fine strategy, and it'll produce a reasonable business, but it's not going to produce a huge business. It's just too hard to hire all those salespeople working with every customer and so forth. You have to have a more clever strategy. So I can give you examples, but all of the really big companies have invented a new way to access information or a new way to do something that didn't require that full cycle and all the time that is required. So many, many people talk to me about their new ideas, and I'm sure there are many of them represented here in the room. The problem is they're good, but they're not good enough. And so the specific question I would say is, do a plan over the next 5 years, and I always like to do 5-year plans, and try to figure out what your growth rate will be like, and then try to figure out what a more scalable strategy would be. So typical example is somebody will build some interesting app that they want to charge $10 for. And so I will ask, well, why couldn't you give the app away for free and then upsell the users? And everybody here understands that strategy. I'll give you another example. I'm quite convinced I know what the platforms will look like in 5 years. I can't tell you what the great companies will be like, but I'll describe it that 5 years ago I said publicly, that the future will be apps that are on smartphones that use Google Maps, GPS, and do something useful. Now, what I should have said was Uber, right? But I wasn't smart enough to say, well, people actually want a personal transportation system. That was up for Travis and his co-founder to invent in Paris when they were visiting. So what do I think 5 years from now we'll be talking about? I think we'll be talking about systems that use Android and iOS, fast networks, powerful machine learning, but they're going to do something else. They're going to use the crowd to learn something. I'll give you a trivial example. I know nothing about dermatology, and I have $1 million. So what I'm going to do is I'm going to run around to dermatologists. I'm going to pay them $1 to categorize skin samples with whatever the dermatological problem is. Put that into my machine learning system, run it through the system, have it do a categorization, and then I'm going to go and sell the same service to dermatologists because my system will be more accurate than the individual dermatological diagnoses. So that model, which is you crowdsource information in, you learn it, and then you sell it, is in my view a highly likely candidate for the next $100 billion corporations. I'm not suggesting it would be Alphabet or Uber or Facebook, but if I were starting a company, I'd start with that premise today. How can I use this concept of scalability and get my users to teach me? Right? So if your users teach me and then I can sell to them or others a service which is better than their knowledge, it's a win for everybody.
So that's Eric talking about empowering the crowd and what that means for gathering collective intelligence or real-time intelligence. And how do we do that? How does CrowdPoint deliver that? We invented Vogon. So CrowdPoint solves the root of our world's most pressing technology problem, and that is information overload. We built a decentralized cloud that transforms the economics of cloud computing, making data more efficient, secure, and performant. Our decentralized cloud is a new and better architecture for distributive databases that democratize data insights and intelligence. Vogon, the AI cloud. Our proprietary decentralized cloud called Vogon provides equal access to intelligence. We call this collective intelligence, i.e. intelligence from the crowd. It is a Web3-enabled form of artificial intelligence and real-time data insights. What is Vogon? Vogon is a first-of-its-kind architecture combining cloud storage, distributed ledger technology, and virtual machines into one complete technology stack. When you combine compute, storage, and networking, what that means is you can automate DevOps and deploy web, data, and application layers from one place, from one easy container. Vogon is self-organizing, self-scaling, and self-learning. Vogon is an infrastructure as a service play. That means that's our monetization model. So we use a unique US SEC filed hybrid utility token to pay for transactions. Developers and consumers can benefit from an embedded fintech environment for frictionless exchanges. So this model is very similar to what AWS, Microsoft Azure, Google Cloud, and all these other cloud storage providers use, as well as Web3 infrastructure companies like Filecoin, Sharecoin. What Vogon enables is authentic intelligence. That's vertically integrated AI. Because we semantically index all data that comes into our ecosystem, we validate, verify, and quantify that data at the source, at the inception. So what that enables is real-time optimization. When you can trust your data from the source, that means that you can really optimize it, as well as build Web 2, Web 3, AI, you name it. Join Vogon. If you have any questions, I would invite you to connect with me. I'll be here today and tomorrow. Would love to meet with you. Thank you for having me.
Okay, so thank you for the presentations. We're going to have a bit of a break for networking and coffee. There's some snacks, I think, as well outside. Oh. Is there? Oh, there is, sorry. One more presentation, democratizing institutional Web3 investments through transparency, standards, and liquidity. If Tudor is here, the founder of Thomas. Oh, okay. If you can use this too if you want. Is it on? It's not on yet.
Well, we'll make it work. All right, thanks everybody. Sorry for the short hiccup. Very happy to be here with you all today. It's great to see so many familiar faces and as well to see this renewed attention. It feels like we're gonna soon turn the corner when it comes to the markets, and I'm very excited to see all the projects that have been building in the space, as well as all the investors that continue on their conviction, and as well new funds that are looking to deploy into the Web3 space. But as we are going towards a emerging time of discontinued conversion of Web 2 into Web 3, a period of hyper-tokenization. Gotcha. As we're going towards this period of hyper-tokenization, we see that there is a gradual need to be able to accommodate to newcomers in the space, to be able to appeal towards less tech-savvy to reduce the complexity, and make sure that the boom and bust cycles that we have been generating in the Web3 space do not continue to propagate, and we can offer a more sustainable growth to our industry. And Thomas is on a mission to standardize transparently and analytically an investment management system that starts off with a Web3 startup marketplace. And thus, we are appealing to the entire spectrum of the stakeholders of the Web3 industry, from institutional investors to startups, also ecosystem funds, accelerators, and service providers alike. Now, let's look at the things that have been shortcomings when it comes to the Web3 space so far. So, a lot of our partners have been mentioning, and this is a common theme, when it comes to the discoverability of startups, but as well as securing lucrative, top-notch deal flow in the space. There's obviously a lot of startups, there's a lot of new excitement, and it feels like Web3 is within grasp for a lot of people, but there's also a very high turnover rate when it comes to investor to startup interactions. So in order for projects to go ahead with their investment cycle, we see also that the complexity and the lack of standards that we have in our space make it very difficult for a lot of participants to navigate it, and as well with operational and regulatory difficulties, the complexities go on multifold. Once the investment cycle reaches its fine, let's say when you're at the contractual agreements, then a lot of the times these contracts become very illiquid or semi-liquid, the way we like to call it. To the point where today, still from the prior bull market, the majority of soft contracts are negative yielding. So we've seen over the past 3 years a very high number of projects that obviously if you reach CoinGecko or a big crypto aggregator have a high fall-off rate. And this is an industry that comparative to the Web 2 space where startups fail at 90% of the time, in Web 3, 94% plus of the time, we see the statistics of projects failing. And this is just the ones that make our radar. I'm not even accounting for the zillions of tokens that are minted every other minute. And this is something that is applicable for the Web3 institutionally backed projects as well, where 33% of the projects that are backed by VCs to a $1+ million still never reached the market. So, Thomas, the way that we see that a path for a more sustainable future can be fulfilled is in a 3-pillar process. First, it starts with an access and having a global startup marketplace that assures liquidity, but also compliant and transparent so that due diligence is standardized and accessible by the people who need to do so. The next step goes into the efficiency and standardization of investment contracts, as well as being able to have a flexible token and cap table management system. While for investors and startups alike, it would be important to have a portfolio and fund and treasury management system, as well as the longer term vision for this is to be able to perform automatic investment contract fulfillment. Finally, when it comes to the tokenization of investment contracts, the most important item there is unlocking the reinvestment cycle. Right now, there's $80+ billion that can be more effectively, through Thomas, re-engaged in the reinvestment cycle. And we see that with the primitives that we're putting in place, we will be able to enable a new DeFi layer of liquidity. I know I don't need to mention the size of the market, and it will only continue to grow. The market that we are appealing to currently can be categorized as greatly as the altcoin marketplace at currently $800 billion in market cap. And we see that Web3 institutional investments in Web3 startups has been growing multifold over the past few years at an average rate over the last 3 years of $24 billion per annum. And the number of Web3 startups that are currently discoverable is around, and reputable, I would say, is more than 14,000. And I'm not even accounting for the infrastructural Web3 components and also the projects that have been waiting for a more favorable conditions to launch. When it comes to the comprehensive platform that Thomas is building, where we are looking to find, execute, and manage Web3 investments, a comparative product that we see in the market that is vetted and used a lot in the Web2 space is Carta. But with the advent of tokenization and our go-to-market strategy, we feel that the value add that Thomas can provide will increase the efficiency of Carta multifold. There's a multi-year roadmap to what we're set off to do, and there are a lot of revenue-generating peer points along the way from the immediate future. The core team that's building Thomas is very much related to operations that we have done at Headstarter. We identified this as a key missing point and as a key need for our partners, our startups that we are working with, that we're accelerating, and our investment partners alike. And we also are backed by a large team of advisors that are skilled in equity, tokenized investments, DeFi, and infrastructure. So in conclusion, I want to stress that Thomas is a Web3 super dApp with a high focus on due diligence, with the goal to enable a new DeFi layer of liquidity and address the needs and services of the key stakeholders alike in the industry. And it's great to be again at Agora. I know that we're going to have meetings pretty soon, and I'm looking forward in the immediate future, to be able to have this matchmaking of startups and investors through a Thomas-built AI, where based on the profile of the investor, the stage of the startup, the certain appetite of each other's when it comes to partnerships, to already have this matchmaking performed, and moreover, have the investment contract standardized so that you know that you have an AI-generated due diligence and summary of the project, so that when you go into the meetings, you will only go and tap into the unpalpable automatic things when it comes to the investment journey, and that is the human nature of it. Thank you very much.
Okay, now it's time for a break. It's also, as Tudor was just mentioning, time for one-to-one meetings. And do you want to say something else, Hadi? See? Okay. Okay, thanks everyone. So we have a little break until 2. Hadi's going to make a couple comments, and then also there's the one-to-one meetings for those that are going to be participating in that.
Okay, so this concludes the first half of the first day of the event. The rest, from now until the lunch break, is going to be the one-on-one meetings. The one-on-one meetings are conducted in the room next to this one. Most of you should have a schedule for meetings, so please make sure that you stick to the meeting schedule. This is the core of our event. This is the main stake that we offer here, is the one-to-one meeting. So please make sure that you are attending those meetings. After the meeting, lunch will be served here outside. So please enjoy the meetings, enjoy lunch, and we will meet again here at 2 o'clock. Thank you.
Hello, everyone. Please proceed back into the ballroom. We're about to start. If you're in the lobby area, please proceed back into the ballroom. We're about to start. Thank you. Hello. Again, please, if you're in the lobby, please come to the ballroom. We're about to start. Hello, everyone. Please, if you're in the lobby, please make your way to the ballroom. We're about to start. Please make your way to the ballroom. We're about to start.
Okay, good afternoon, everyone. If you can please have a seat, we're about to begin the afternoon session. Okay, so before we kick off the second session of the first day of the event, I just want to remind everyone that Agora is issuing its own token. If you would like, you can scan this code. This will link us to your wallet, and you will benefit from the airdrop that's going to happen soon. I will now ask Katie to come on stage to take care of the rest of the program. Thank you.
Afternoon, everyone. So we have two panels left. Exciting news about the token. So I think we'll put it up again at the end if anyone wants to scan that, didn't get a chance to scan. The next panel is going to be led by Alex. If Alex is here, he can come on up. It's going to be about digital assets market, the outlook for 2024. So let's all give a good warm welcome to Alex and then listen to this panel. Thanks, guys.
So hi everyone. I really don't want to steal your time, and I think we can start immediately right now. So all our esteemed panelists, please welcome on stage, and I'll let each of you introduce yourself. So please come here.
So hi everyone again. I'm really happy to see
all of you here. And I do believe actually we have extremely important topic for today, because digital assets and everything is around it is going to be more and more important sentiment in our industry. So I do believe you'll find our discussion really insightful, and you'll definitely find something new for your business, for your projects, or even for your investment thesis. So let's start immediately right now, and I want to ask each of you to briefly introduce yourself, one by one. So please.
So maybe I can get started. So, hey guys, so I'm Kevin from Gate Ventures. So currently I'm the managing partner at Gate Ventures. So you probably know about Gate.io. So we're backed by the crypto exchange. And we start our business back in 2021. And after 2 years investments, we have allocations more than $50 million US. Recently, we decided to launch our second fund, and it's going to be a seed round investment focused fund. And I think with this year's trend in the digital assets market, we think the following years would be great for venture investments. And thanks.
I guess I'm next. Hello, everybody. My name is Hervé François. I'm French, but I'm based in Abu Dhabi, and I work for Investcorp, where I run the blockchain fund, which is early stage investment into the blockchain/Web3 space. So the fund has been launched 1.5 years ago, and as I'm concerned, I work in the space since the last 8 years on anything blockchain, digital asset related. Thank you.
All right, so my name is Yuri. I'm the founding partner of NextGen, and we are a multi-family office investing into Web3, based here in Dubai. We do mostly pre-seed seed investing, and we've done that since 2016. And we are category agnostic, but our main focus areas are infrastructure tooling, because we still believe that we're in the infrastructure stage. But primitives are becoming more and more adoptable. UI UXs are becoming slightly better, not yet where I would like them to be. But yeah, we're definitely vibing into the gaming, NFT, and also into the layer 2 and ZK ecosystems. So if any of you are forward investing or have a project that you're currently raising for, feel free to knock me on the shoulder, and looking forward to speak.
We're sharing. Good afternoon, everybody. And first, I'd like to say thank you for Agora Group for putting this on, and really excited to be here and share some insight today. I always find at these events, I absorb and learn as much as we get to share. I'm the managing partner of BlockTech Investment Group out of Texas. I have been a serial entrepreneur in venture capital for about 20 years. Started in blockchain space about 4 years ago now, so a new kid on the block, but we're really excited to see the ecosystem grow. We've got somewhere in the neighborhood of about 100 projects globally, everything from layer 1s to NFT gaming projects, infrastructure projects as well. We're excited to see the infrastructure continue to grow. With Andrew Durgee this morning talking about real-world assets and what's on the horizon there. Republic has really led the way. We've invested in some similar projects. The INX platform, the sole security token platform in the US that's got SEC approval. They acquired, I think, 10% of that about 4 months ago maybe, but there's a lot of good things working and looming in the space, and so we're excited to share what 2024 will look like.
Perfect. And I'm Alex. I'm co-founder and managing partner at Crypto America Capital. Crypto America Capital is a global investment fund. We invest a lot in different blockchain crypto projects all the world. So yeah, let's start. Yuri, I want to start with the first question, especially for you. This year, 2023, it was a really big challenge for digital assets, especially in terms of some, legal battles, legal frameworks. And for me, it looks like the whole industry was, the whole industry tried to find the way how we can put digital assets in a sustainable legal framework, especially in association with some recent battles with SEC, right? So I'm really curious to get know from you how all these things can impact the whole digital assets landscape in the upcoming year. So please. Okay, now you have two microphones.
We're not sharing anymore, I guess.
Figured it out.
The question was to me? Yeah. No, 2023 was definitely difficult. I'm of the opinion that all of us entrepreneurs in the space, but also the institutions, we would bite well with clearer regulation. And areas like here in the UAE, Hong Kong, Singapore, Switzerland, El Salvador is coming up, right? There's a lot of regions that are picking up the pieces, if you will, with regards to where regulatory clarity is provided or increasingly more provided. I think that for the space as a whole, and particularly for founders in the Web3 space, decision paralysis and having a vacuum in the legal regulatory frameworks is kind of the worst, the worst part to entrepreneur in. Right? Like you want clarity because you need to be able to make a risk analysis on where you can do things and where you can't do things with regards to compliance, right? So I think that this is now really coming to the fore. If the ETFs are indeed going to convert as we all hope for and believe they will, then this asset class will become a regulatory compliant asset class. And I think with that, more and more scrutiny will be brought to those frameworks and more clarity for entrepreneurs to then make their decisions on. So I think that we're really on the brink of this asset class becoming an adopted and confirmed asset class, and clarity is going to follow as a result of that. Yeah.
Okay, yeah, actually I just want to follow up this question. So you just pointed out we are in the process of making this clear, right? So I do understand it's extremely difficult to predict when we'll achieve the point. It will be well regulated and extremely clear, but what's your expectation regarding terms? How much does it take?
Me or the terms with regards to?
Yeah, how long will it take to make it completely clear in terms of regulation?
I think like all the focus is on the US. I think the US is, and you're from the US.
Yeah, it's because I can help you out with that one.
Maybe you have more insights in the US because the US is going to lead the charge there, and a lot of jurisdictions around the world. Even though Europe is taking a clear stance with MiCA, I think that we're all looking at what is the US going to do. So, yeah.
Yeah, I think,
maybe.
I mean, there's been some positive activity. I think if those that have paid attention, even 6 days ago, there was a bill passed in 6572, which is to, and of course, will it make it through the Senate? Who knows? But there's been actually 50 bills put forward in the last couple of years. One of the most important ones has been voted on. This last one, 6572, cleared the House with 46-0 votes. So, you know, there is innovation happening on the regulatory front in the U.S. as well. I think everybody, you know, hears, you know, the SEC, all of their, you know, lawsuits and claims, and goes, you know, what's going to happen in the space, you know, but there's a clear distinction on who sets the actual laws and regulatory framework for the SEC and CFTC, and so that's where, you know, there's a lot of Congress members and senators involved. Cynthia Loomis, Tim Scott is another individual that's really pushing the regulatory landscape in the U.S. But, you know, it's one of the things I'd say is, you know, a lot of times there's this clear separation between other jurisdictions that have done really well, Switzerland, Singapore, the UAE. And I think if you look at some of the growth that the UAE's had, you know, I think it was 2019, Sheikh Mohammed had come up with the 10 commandments of governance. And one of those, you know, I like the first one, serve the people. I'm an impact entrepreneur, so it's always about people as well. But ultimately, he said, innovate or withdraw. I think that was number 6. And it's basically governance that governments that don't innovate grow old, and so that new ideas are what will help outperform the competition. And I think that innovation, that vision was cast, and why we're seeing the growth and development here that we are. I'm kind of envious. Actually, today I get my residency, so yay to that.
Congress.
But I think that it's equally important because as the U.S. regulators meet, as lobbyists get together, they need to have some clear direction, and so setting up and having areas like the UAE that have that framework in place. Switzerland's very clear on their asset classification as well, on the different asset classes. So those things help because it gives us an example to take to the regulatory bodies in the U.S. and help develop that regulatory framework.
Something to add, maybe?
Yeah, please.
Even if the US has tended to slow down like lately, we shouldn't under-considerate what happened in the rest of the world. So, like you mentioned, like Singapore, but also specifically in the region, they play a catch-up, and even now, I think are ahead of the game. So you have a regulation that's been worked on metaverse, for instance, like in Dubai, on the DAO/DLT in Abu Dhabi. So now certain regulations are really ahead and helping the whole ecosystem. And I will give you another example, maybe to answer your question, is about the tokenization of real assets that we're talking about. So at the time I was working at ING Bank 5 years ago, we're already working on that. And at that time, we figured out that the feasibility was fine. We could do it, like technically it was not an issue, but the regulation was an issue. Now, tech is not an issue. The regulation is not an issue as well. You can do it here. You have a clear, according to me, is a clear regulatory framework to start to do it. You can argue that you miss other problems like liquidity on secondary market, but to answer your question, I think it's already there, and the other jurisdictions will just converge and come also for themselves with their own regulatory framework, but it's already there, more or less.
Actually, I'm really happy to see so engaged panelists in this discussion. It's much easier for the moderator to hold this kind of panel as soon as everyone has something to add, and what's more important, wants to add. So, Ken, I want to engage you in this discussion. And firstly, congrats with your second investment fund. And could you please, as an investor, point out what kind of challenges did you have as an investor in terms of all these legal battles this year, and probably in what kind of way investor sentiment, investor behavior will be transformed next year, as soon as all of our speakers, as just pointed out, the whole regulatory environment is going to be more and more mature?
Yeah, great question. So I can give you a brief background. So I think my investment experience was highly connected with compliance and regulation, because before my joining at Gate, I was working for an Asian-based crypto VC, and we invested in Coinbase in 2018. So probably I'm the only Asian investor in Coinbase. And the reason why we chose Coinbase rather than FTX and Alameda, because they pitched us almost the same year, because we think compliance is the top priority for the exchange business. So that's why we made a good bet in Coinbase. And recently, we also noticed some positive geographic change in terms of the digital asset regulations. So, for example, we see Dubai and Hong Kong, now they are offering trading license for digital assets, right? Historically speaking, Asian has a larger user base for crypto space. So we think in the following 3 to 5 years, hopefully there would be another bull market. So, so in this cycle, we think Asia is coming back to the digital assets market. And it's not like the entire world has an intact plate for crypto regulations. So it's more like a mosaic. We have different realms, regimes, so they may choose different strategies, deciding what kind of regulations, rules, license, right, to offer for the industrial players. So I'm I've noticed that, generally speaking, for the digital asset market, there won't be a smooth path. The path has been always the zigzagging, right? But sooner or later, I guess innovations and regulations, they'll come up to each other, making compromise. So yeah, I guess in the following years, the regulators will figure out the way out, or maybe the way in to crypto market, right? So yeah, so we got hit heavily from the United States regulations, a lot of lawsuit battles, right, with SEC, Department of Justice, etc. So, but on the eastern side of the world, we see regulators are recognizing the digital assets as legit. So that's why different countries are now being more proactive, opening the access to this market. And thank you.
The topic is really deep, and unfortunately, we don't have so much time to discuss everything. So I just want to ask the next question in a blitz form, okay? So I'll ask this question, and I wanted to have answers from each of you, one by one, in a very short and insightful form, okay? As soon as we talk about digital assets, of course, we cannot ignore macro. There are a lot of things, there are a lot of points around what kind of macroeconomy will face next year. So my question is, how digital assets markets could be impacted by macro situation, and what kind of observation and expectation do you have for the upcoming year 2024? So Jeremy, please start.
Yeah, actually, I think we're at an exciting point, but kind of an inflection point too. I think, one of the things to give consideration to is, Gary Gensler's never waffled or wavered on his position of what he calls a security, does the Howey test, right? And that's one of the challenges is globally, you look at how many ICOs, were they raising capital to fund the project from investors? And so this is where I think that it does have significant implications. And with the EFTs, they've got a deadline of January 10th to be able to launch those. And I think that they will, I think they're getting to the point where they're at the final stages and we'll get regulatory clarity. But that's on ETH and BTC, which are both listed as commodities. So that does change things a little. I think that, there's a reason Coinbase has 250 tokens listed versus the 3,000 that are out there. And so I think that we're going to see kind of a little bit of a shakeup, to be completely honest. I think, projects have from the last bull market cycle, we're kind of hanging in there, holding on, and we've seen lots. We have lots in that position. I think with the expectation of once the market goes up, it's going to go up the same for everybody. But I think there's going to be a kind of a divergence from that. And we're going to have a lot of projects that have, been funded, built in the background during this bear market that will really clearly differentiate themselves in a value proposition to the marketplace, getting real-world adoption. We talk about the cycle where we're at for adoption and, real-world applications. We got RWAs all over the place. But, the real-world application, I was on the phone Friday before coming here with Zach McKenna. He's the head of blockchain at Brinks. They're a 160-year-old company with 72,000 employees. And it's the Fortune 100, Fortune 500 companies that are looking and developing and onboarding blockchain teams because they're looking at, the tokenization of real-world assets, and they're looking at what projects and what opportunities are out there to, they usually do one of three things: build, buy, or rent. But I could go on for an hour, so I'm going to stop and turn this over to everybody else for their input.
You want a quick answer, right? Okay. I believe that macro is important for sure, though at the same time, smarter and more efficient technology is always going to attract attention. And it's always going to magnetize financial investments and returns. I was in Abu Dhabi FinTech Week 2 weeks ago. Ray Dalio was speaking there. I think if anybody has an amazing view on kind of where the world order is going, I think it's going to be a very volatile time in macro for the next 5 to 10 years to come. I do believe, though, that AI and blockchain, as well as the autonomous economy, including IoT as well, that's where we are going to move towards. And then like autonomous agents within the AI space, they will need a transaction layer, which needs to be probably blockchain, because they're going to be autonomously those transactions forward. So I do believe that this is a massive opportunity actually for the digital asset space. We need a harder form of money, or at least as an alternative. So I think the thesis and the perfect storm has never been better for this space to come to the fore and become an alternative asset class to what we've known for so many decades, if not centuries.
Yeah, I tend to agree. I agree. And ultimately, I also see it, the macro impact / the rates and the risk on as a direct link with what we do as investors and ultimately our end investors. I'll give you an example. So we agnostic in terms of industry. We have a global mandate, so we invest in different spaces. But when we talk to the end investors, they still associate Bitcoin with blockchain. So as long as they don't see, they don't hear like good news about blockchain, Bitcoin per se, then they still believe that the space is in a need of recovery or have issues and prefer to spend more time on AI. So I think those elements will help ultimately to also for us, like for an investor, to raise more and that we can re-inject into the startups and support them further.
Yeah, my quick answer would be investing in something too small to care, because previously people making investment and talking about something safe to investment is that something too big to fall, right? But I guess in this high interest rate environment, nobody is safe. But in the digital asset market, what's safe is something too small to care about in the macro world. So that's why we decided to make investments in the seed round in true innovations in the digital asset space. For example, like Bitcoin ecosystem. So even though the upgrades on the Bitcoin protocol is too slow, but still we have the Taproot, RGB protocol, etc. Both of these protocols have been released last year and this year. So I'm watching dozens of layer 2s to be launched on Bitcoin mainnet, probably in 2024, and adoptions of other cryptography technologies like ZKP and FHE, zero knowledge proof, and fully homomorphic encryption, etc. So these kind of crypto native innovations, which can truly drive the innovations in the entire crypto space. So people say that it's going to ZK everything in the blockchain, right? So I would say there will be very interesting, tiny, small innovations on Bitcoin ecosystem, on Ethereum ecosystem, etc. So I would say, yeah, it would be a good strategy to invest in something too small to care. Thanks.
Or just to add on, or it could be a bit bigger. Like I give example of the infrastructure. I believe for 24 we'll see a lot of M&A consolidation into exchanges or like custody, tokenizers for slightly different reason. But let's say tokenizer because they have difficulties to monetize it, so they need to join forces. For the exchanges, back to the point about regulation, especially Europe, MiCA and others. So if you don't get licenses, you won't be able to operate. So people will have to be open for acquisition and or like to get a bigger market share ahead of opening the market and all the future users to come in. So I think on the infra, it doesn't sound sexy, but there's a lot of things that will happen and has potential if people are willing to invest there.
Yeah, and actually, Harry, I want to ask you another question. We are limited in time, so could you please just provide maybe some short answer on it? But I think it's really important to highlight as well, we cannot ignore it. It's about emerging markets. So in my personal opinion, digital assets bring a lot of value, a lot of opportunities, especially for emerging markets. And this is a great time way they can gain this opportunity.
Yeah, definitely, and I promise I try to keep it short, but give you two examples, because we use some investment as a proxy to get exposure to a country. So for instance, we invested into Bit2Me, which is digital asset exchange, in order to get exposure on LATAM, because with Telefonica, they can enter like LATAM market. So for us, is where you will have a new wave of adoption besides gaming, but also like LATAM. Another example, like another digital exchange we invested called Facet, is for MENA. So they're based in Dubai, but they also have exposure for Asia, Africa. Again, Africa, next big one. I think after LATAM, but even bigger, massive. So definitely something to look at, but after is the time to market. Like how long do you want to hold your position when you want to come in?
Perfect. So I do believe actually it's time to go to closing words. So I want to start, Kevin, with you, and then just go one by one. So the question for the closing remark is very simple. What kind of advice can you share with investors, founders, just users who are going to enter digital assets markets next year?
I would say fundamentals go first. So if you're an investor, you always check the fundamentals of the asset first, and that's it. I would say that's the core to assess the possibility of probability of this specific investment. And for a founder, I would say product development. Product always go first. If you have a good product, the users will come to you, and that's it. So you don't need to have a lot of budget in terms of the go-to-market strategy, etc. So the focus should be on the product itself. And for ordinary people, I would say digital assets are going to stay here because according to mainstream media, Bitcoin has died for more than 100 years, 100 times, right? But it's still here. And for example, like Ethereum and other public chains, layer ones, layer twos, these true innovations are driving the value of this market. So you always need to respect the fundamentals, the innovations, and that's it. Thanks.
I would just say, start to look at it, invest now, don't wait. Either you direct investment or fund of fund using one of us for doing it. It's happening in a way that the valuation is already done. So my advice, like, don't wait to hear about it in the news everywhere and see already valuation being up and it would be too late. If you believe in that space and do your own research and being more knowledgeable, just act now. I think it's a good time to enter.
Yeah, I'll take the stance on token economics because both investors as well as founders need to look at token economics. Not every project obviously has a token attached to it, but I think for newcomers and people that haven't been part of a full 4-year cycle, a lot of them are getting burned on token economics. I was the managing partner for Prism Group. We've done the token economics for Algorand, Elrond, Polkadot, Compound, Blockstack, all these type of protocols. And what you basically see is that in 2017, there was 0 vesting terms. Tokens just came out right away. And now we're at a stage where vesting terms are actually going to likely pass over the end of the bull market. And for all of you, once you decide investing or setting up a token economy, to make sure that your vesting terms for founders, advisors, as well as for investors do make sense, and basically keep an opportunity for a sustainable token economy to be there beyond the bull to the bear transition. I think that is a very, very important part to look at when scaling into or when setting up a tokenized economy.
Yeah, all great points. And to Her's point, I think the time is now. There's a lot of projects out there that have, over the last 24 months maintained, but there's good opportunities. Valuations are low. There's some really good projects that are, developing real use cases for the coming bull market. And then, the tokenomics is important as well. I've kind of lived off 5 T's. I look at the team and talent. Do they have the ability to deliver on that? The technology, is it disruptive? What is it? What service does it? What does it actually do from a function standpoint? And then tokenomics is a key part of that too. total addressable market, and then the timing, right? Is it premature? There's a lot of good ideas out there, but is the infrastructure in place? Other projects and what's necessary for it to go to market. So I think all those things are good. I think the timing is really good, but I would lastly say, aside from just tokens, I think more and more investors are looking at equity opportunities. So if you're a project out there, looking at some kind of hybrid and combination, because there's a lot of challenges still with the, clarity around tokens, and so I think investors, especially private equity, are going to be looking for ownership in the actual company and organization itself.
Jeremy, I do believe your phrase, "the time is now," we can highlight and take the phrase of the whole panel. So, guys, thank you very much. Thank you very much for this discussion. Me personally, I find it very insightful. Thank you for our dear guests, and please don't be shy to talk with guys, to find them. I do believe there are so much things to dive deep, and of course we don't have enough time to cover everything, but I do believe in the future we'll have more and more opportunities to discuss this topic. Thank you.
Thanks, guys. That was great. So I think the key takeaways are get in now before it's too late. And digital assets are here to stay, right? Okay, so for the last panel of the day, we're going to talk about the king of blockchain, which is going to be an interesting discussion. A little bit around, is there one? Are there many? Let's have that discussion. So if Anna could come up and present the rest of your panel, Amit, Asim, James, and Kamal, we'll get the conversation started.
Hello, hello. See, it works.
Hello, everybody. Great to see here everybody today, and we're gonna discuss layer 1 and layer 2 blockchains. But first, let's start with the brief presentations of our panelists. So let's start with you, Asim.
Hi everyone, I'm Asim. I'm one of the founding partners of Eterna Capital, a blockchain VC based out of London, launched by three ex-BlackRock.
Being near Ava Labs, who are all kind of LPs in the fund. So we deploy in the pre-seed, seed stage, both equity and tokens. We also do a few strategic investments later rounds. And then the idea is how we take these companies and really get them to achieve that vision of being cross-chain. And then we also have a sixth liquid fund from which we are also deploying, from where we do mainly liquid and soon-to-be liquid tokens.
Hello, everyone. I'm James Perillo. I'm the managing partner at Figment Capital. Figment Capital is an early-stage venture fund that focuses on blockchain infrastructure, focusing on scalability, interoperability, ZK technology, privacy, and improved user experiences through those other 4 categories and verticals. We spun out of a company called Figment Inc., which is one of the leading privately owned proof-of-stake infrastructure providers. And we're currently raising and deploying out of our second fund right now.
So, hello, Mikael Björn. I'm the CTO of the Hashgraph Association. Filling in for my boss, Kamal, who's otherwise employed. The Hashgraph Association is the enterprise arm for the Hedera Hashgraph blockchain, so which is quite new. My background is I work with the 10 largest blockchains around, so I have a couple of things that I probably need to fill in here. And I'm really happy to be able to add some engineering flavor to the conversation as well.
Thank you, and my name is Anna Tuteva. I'm CEO of Coinstelegram. We are a news media group company. We have a news website as well, PR marketing agency, so we help projects in the space with the promotion, getting them featured in top media like Forbes, Entrepreneur, CoinDesk, Cointelegraph. We engage as well with a lot of campaigns, and as well we produce a documentary film about blockchain and crypto adoption, and as well how this technology impacts people's lives. And we have the many leaders of the industry, such as Vitalik Buterin, creator Ethereum, CZ, founder of Binance, and Deep Naval, co-founder of Polygon, Sebastian Borja, co-founder of Sandbox, and many others. So let's start with a lot of VCs which invested into these different layer 1s and layer 2 solutions. And now even by capitalization, if you check on CoinMarketCap, 7 of those coins have their own blockchains. And we see still a lot of all these new layer 1s, layer 2s get a lot of funding, and we see different blockchains, public blockchains, private blockchains, consortium blockchains, or hybrid blockchains too. So we'll discuss what's the purpose of those blockchains and who will really win in this game of blockchains. So let's start with the first question. How do you see the trend that now layer 1 and layer 2 become more industry focused, and there appear different side chains or as well different app chains, etc. So like it's more technical thing to discuss. So how do you see the trend that they're becoming more industry specific, and how does it influence the overall blockchain ecosystem? And let's start with Asim.
Sure, thank you. So I think there's still a lot of infrastructure left to be built. I think it's a bit like the internet. You have lots of different networks and payment gateways and email gateways and these things, and they all have to find a way to connect together. So interoperability is key to all of these layer 1s and layer 2s existing. And many of them focus on different things. They create different environments, whether it's to do with speed, decentralization, or security. So there is definitely a need for more than one. And I think in terms of specialization, we've seen a lot of trends recently in terms of compliant focus, privacy focused. There's a lot of things to do with privacy pools, fully homomorphic encryption. And I think if we're talking about institutional capital entering the space, some of this stuff is really important because nobody wants all of their transaction information publicly available. So having more infrastructure right now, I think there's still a lot of space for it. But obviously there is a bit of dilemma because the way infrastructure works in Web3 is that we're talking about bootstrapping networks. And when it comes to bootstrapping networks, you end up with high valuations, like you mentioned about the market cap. And those come before those projects actually deliver success. So there's a bit of a dilemma there in terms of how valuations end up so high without success attached to it. But that's kind of the nature of bootstrapping networks.
Thank you, Amit.
Yeah, I think just building a little bit on what kind of Asim said. And as you mentioned, so what we are seeing is eventually it will be a multi-chain world. We don't see that one chain becoming the king or one chain kind of being the de facto. And there will be some kind of, just as today, for example, I was speaking to a few people, just as today you have, you use Google, you use Microsoft for cloud, you have AWS, Google, Microsoft, people use according to their needs. Similarly, there will be different chains for different use cases. And we are already kind of seeing that emerge. So for example, a lot of, for example, deep-in projects, NFT projects, they are kind of housing in Solana. And because of that, what happens is they see there's a lot of synergy with them being on the same chain. As Solana pumps up, these deep-in projects start pumping. Also, there is interoperability among these projects. Similarly, we are seeing, for example, use case specific chains. For example, we invested in Say Network, and it's very strong on DEXs, very strong on transactions. And for kind of RWAs, Agora and a few of the other chains where RWAs would house. So that's kind of, we would see that some chains kind of find their sweet spot in certain projects, and then it creates a network effect. For example, in our portfolio, we had 2-3 deep-in projects where they were originally building on other chains, And it just made a lot of sense for them to integrate with Solana, just because of all the activity happening there, all the other projects there. And eventually, I think the way, and that's the whole kind of thesis of our current fund. We see interoperability, because for the end user, it doesn't matter what chain it is. For the end user, it's all about, hey, what problem am I solving? How easy it is for me to log in through my Polygon wallet, through my Soulflare wallet, Phantom wallet, without regarding on whether the NFT is housed in Polygon or Solana. So that's the future, how these different chains, they speak to each other and create a seamless experience for the end users.
Thank you.
Yeah, so I want to take a little different approach to this one. So I've almost been in the industry, like as of like next week, it'll be like 10 years. And back then, I was very excited about the promise of blockchain technology. And today still, we're talking about the promise of blockchain technology. And so we're in a bit of a, I think right now you're seeing a lot of infrastructure projects. It's been a bear market for the last year. And during bear markets, like you're looking for something that's a little bit more like you want to insure yourself and kind of like protect yourself from the downside. And so infrastructure becomes sexy rather than the application layer, right? Which is a little bit more risky. And so there was a little bit of like a build it and they will come sort of mentality over the last 10 years, I would say. And we're trying to find and innovate we're not innovating on the edges still. I think we're probably innovating somewhere in the middle. But we have started to see, and so the questions become like, what are the use cases we're building for? What types of like applications and use cases will even exist in blockchain? And right now, I would say we're still mostly speculation, right? I mean, I think when you hear that there's like new L1s coming out that are improving throughput or lower latency, right? Or faster block times, or maybe some new and interesting like features, we're still experimenting. We're still speculating on the value of these blockchains. But we do have right now 2 applications that like people are using them for, gambling and stablecoins. And like gambling is not a bad thing, by the way. Well, in some places. So I think what you generally see is like there's some speculation going on. There's tokens that are being traded. There's value being created, and people are generating wealth. And then secondly, you have stablecoins, which are providing for the first time, dependable conservation of wealth, and being able to like transfer that wealth to their families, to other people in their, without like hyperinflating their local currencies, and having those like your savings and like your earnings depreciate over time at a rapid pace. So we found 2 applications right now, and there's a promise of a number of other applications and a host of other types of ways that this technology can be used. And so I think the infrastructure still needs to exist, and it will continue to exist and be built out. But I think right now we're in a pretty good spot to like start to explore that a little bit more through improving blockchains and like throughput, and like I said before.
So I think, well, I'm one of those guys who think that the bear market actually forced us to start going back to the original sort of promises of blockchains, where we actually start talking about the business cases that we talked about 10 years ago, which is actually really good because everything that needs an immutable ledger in some way or another could use a blockchain. So we are now forced back from the speculation into actually looking at what the enterprise business cases are, instead of just looking at how can I make a quick buck on sort of a trading somewhere. So that's one of the things. The other thing is that I've been in the business for a little bit longer, I think. So what I see now is happening is the same thing I saw in the beginning of the 90s, where the internet or the networks started to converge into what we now call the internet. So where we're actually talking about IP networks. And that's really, really interesting. So when I attended one of the first interoperability conferences at ETH Denver this spring, it was really, really interesting to see how many of the layer ones were there talking about how can we actually work together instead of just competing, because we are seeing that the market is getting a little bit thin here, so we need to get the money in together to actually force these to happen. I also see that a lot of the interesting business use cases are back, which is really, really interesting. Logistics, finance, the things that actually drive what we do. in the economy. Yeah, well, that's it.
And one more question to you, Michael. Would you say that Hedera is more like industry-focused blockchain, or like it's industry agnostic and you target different enterprise clients mostly?
Well, you're talking to the CTO of the Hashgraph Association. Yes, definitely. What we do is that we focus on enterprises, large enterprises and governmental organizations around the world. We are focusing on the major sort of interesting business use cases or even environmental use cases. We had a large presentation here at the COP28 regarding one of the key foundation infrastructure parts that we did with the Guardian, which is actually something that helps for keeping the account of carbon credits. So that's one of the things we do. But we're also helping out a lot on the finance side, getting things ready for the next generation of banking, as well as also the larger enterprises that are forced to get into the green market with, for example, looking at, okay, how can we make green cement? Or how can we actually count for these electrons that are used from a solar panel somewhere? So that's where we are. And we're also basically a way of being able to look at blockchain as something that's really stable, because on that area you can always calculate how much a cost would be from a user standpoint, which is quite a unique feature in this space right now.
Thank you. And my next question is to our VC panelists. And generally, if you check the majority of VCs in the space, they all prefer to invest into infrastructure, into different layer ones and layer twos, and as well from the funding point of view, these layer ones, especially recently, got a crazy amount of investments. Like, for example, Aptos raised $350 million, we raised $300 million. So why do we need so many layer one blockchains, and why do you see the potential in it as a VC? So let's start with James.
So I blame Sam Bankman-Fried for the $300 million and the $350 million raises. I think those were led by FTX Ventures. But he's got other problems to deal with other than me right now, and my concern about that. You know, I think we're all starting to, I mean, there's been massive improvements, I think, from like the early days of blockchain, right? We had we had an application-specific blockchain, and that was Bitcoin. And all it was good for was one thing, which was transferring assets back and forth. Then we came to, then Ethereum comes and it provides smart contracts, right? Where you can build applications on top of an autonomous, like sort of autonomy and automation into how people transact and exchange value. You can create, you can lend, you can borrow, you can trade, you can create art and transfer value from one person to the other. But the block time, and so then from there, what starts to happen is we get to the point where block times are a little slow. It doesn't really scale for a global user base. And so we start to kind of improve and push out beyond the fringes, right? We have lower latencies. We have like faster block times, faster transaction times, and settlement times. We start to look at like different types of like asset types that can be built on top of there. And so I think what we're going to see, and then what we start to see is like the slower blockchains, like Ethereum, ultimately they need to scale also, or at least, or they'll just like kind of extinct. They'll go extinct. And so you find scalability solutions that are built on top of them, layer twos that are going to improve the throughput and improve and try to keep up with some of these faster, newer blockchains. And what you see when you have like layer twos and you have multiple of them, then you need these blockchains to talk to each other. And so then you build out interoperability so that one blockchain can speak to another, because they can't do that like initially. As we continue to grow and people start to continue to build these, like use these blockchains, people from other parts of the world might be like applying to like, might use one blockchain over another. You might find that there's regional, tribal kind of ties to each like different blockchain. And also institutions start to get involved. They start to get excited about the applications. They start to get excited about the use cases and the reduction in costs that it could help reduce their overhead. And then you start to think about privacy, because banks are going to need privacy in order to, like user privacy and confidentiality of their user base. And so then you start to think about ZK technology and privacy. So, and all of this needs to be done in a very easy way for people, for everyday users. Today, you know, like you've probably been using blockchain for a while, it sounds like. I've been using it for a while also. Not everybody wants to write their seed phrase and like store all of the value of their entire net worth, you know, on a piece of paper, in a lockbox, in a bank, in the basement somewhere. You know, you're gonna need to abstract this away and make it easier for everyday people to get onboarded. And to use it on mobile phones for people who don't have desktop computers in certain parts of the world, and just kind of like leapfrogged over the desktop computer era of compute. And so you start to see the reason why there is all this infrastructure and why there's investments in this infrastructure. Because just like telecommunications, I think there's still investment in telecommunications today, and people are using satellites now to like access internet. You see something very similar when it comes to blockchain infrastructure. That's why we are focusing at Figma Capital on scalability and interoperability and ZK technology and user experience.
Thank you, Amit.
Yeah, I think totally agree with James, and kind of a little bit building on that. So one of the things we saw is kind of so many, and Aptos, by the way, kind of, we are working with Aptos as well. They are an investor in the fund as well. One of the things we saw that these chains themselves kind of are realizing that, hey, the industry is moving towards consolidations. For example, there is this joke like, what is the best place to die? It's on the second page of Google. So, you know, like generally what will happen is in the blockchain space, I think you have to be in the top 10, 20 to get that limelight, to get users to come and build. And slowly beyond that, you become less and less relevant. Just the amount of TVL, traction, your coin has to be like at a certain price for the transaction fees to be sustainable, for the projects building on you, whether it's an NFT project or a DeFi project, the transaction fees that they collect, for them to achieve break even, the coin has to be at a certain price and so on to make sense. So that just creates a virtuous cycle. But increasingly, like we are seeing consolidation. For example, you know, earlier, I think it was in CC Paris, I think, or somewhere where Celo announced that they'll become a layer 2, ETH layer 2, right? So they went from an independent change to becoming a layer 2. I think Near announced that, I think recently, that they are becoming a ZK for Polygon. So we are seeing this consolidation happening already, where, and right now, to be candid, like the place where we feel most of the liquidity is housing is primarily L2s. So Arbitrum, Optimism, you know, kind of modular chains coming in, scroll based. So that's where, you know, kind of we see most of the liquidity coming in. And so that's the idea, that eventually there will be a consolidation, there will be working together, but there still will be some chains which are good for certain use cases.
Thank you. Asim?
Yeah, I think like you mentioned about how much some of these guys raise, it links to the point I mentioned before about bootstrapping networks, and also how important ecosystem build out is. And what that's led to is a lot of competition between chains, and this is causing fragmentation in the market. But ultimately, with some of the technology we're seeing from ZK or account abstraction, I think what we're doing is we're abstracting away for the users where things are happening. And I think eventually we'd move away from this fragmentation to easier accessibility across networks. And part of that would require some level of consolidation as well. But you know, in terms of some of the stuff, James and Amit covered quite a lot in terms of some of the use cases. One other thing which we're seeing quite a lot now is like off-chain compute, realizing that not everything can be done on-chain. And from that perspective, can you do that in a trustless manner? So you're seeing stuff like zero-knowledge-based virtual machines and things like that. And I think essentially, you know, the focus on infrastructure is high, but if you think about like from a Web 2 perspective and, you know, cloud computing and things like that, there's a lot of things that are currently being built in Web 3 is imitating Web 2, but trying to do all the different infrastructure in a decentralized manner. And I think there's still a lot of things that still need to be built with that respect to basically enable good, you know, large use cases and easy accessibility across networks in a way that the user doesn't need to know where the activity is taking place.
Thank you. And my next question is to James. Since you invested in Figment Capital in some data availability solutions as Celeste and Eigenlayer, so how do you see this transition from monolithic to modular stack impacting the development and adoption of blockchain, and what are challenges and benefits come with it? And as well, Amit particularly mentioned that some blockchains becoming now layer 2 as well. NEA, besides cooperation with Polygon, now becomes data availability layer for Ethereum for faster finality. So can you tell your thoughts on that?
Yeah, sure. So as Anna mentioned before, so number one, modularity is it's a long road. It's going to be a long journey for us. Just to be clear here, we're not going to see, I think, everything go modular overnight. And I can talk a little bit about what modular is, but as Anna asked before, what's up with all these L1s, right? And one of the things that modularity tries to do is it tries to kind of compartmentalize and break up these monolithic blockchains. A monolithic blockchain is essentially has an execution layer, it has a consensus layer, it has a data availability layer, and every single one of these L1s has all three parts of those. So we're just rebuilding blockchain after blockchain after blockchain, and they have to kind of and application developers on top of them have to commit to a single sort of like execution, consensus, and data availability layer. What modularity does, and it kind of starts with, I guess, the data availability layer, is that now all of a sudden, developers aren't going to be tied in to an execution layer or consensus like layer that they want to use. Just by using the data availability layer, which let's call it layer 0 of a blockchain, of a monolithic blockchain, sorry, modular blockchain, but it's at the bottom of the layers of a monolithic blockchain. Now what you can do is you can start to build roll-ups that have execution or just specializing in execution or just specializing in consensus of some form. And this allows for like a better developer experience eventually. But there's a lot of work that still needs to be done on the developer experience. So when you think about like modular versus monolithic blockchains, almost every single user that comes on board, new user, is most likely going to use today a monolithic blockchain to begin with. It's going to be very hard for a new user to come on board to like this like modular blockchain right away. So they're probably going to get exposed to like a Solana or an Ethereum or Bitcoin. And then what winds up happening over time is like they might explore some other things. Now developers are probably very similar. When you're building an execution, when you're building a roll-up, that's much harder than building an application on a layer 1 that takes care of all of those things and kind of, you don't have to think about it. You don't have to think about what execution layer you want or environment you want to use, whatever kind of consensus environment you want to use specific to your application. And so we think that like over time, as the developer tools get better, as the DX, developer experience gets better, that modularity has a real place in the world of blockchain development, but that's going to just take a little while. And so we're really excited about we're seed investors in Eigenlayer. They're the talk of the town in Ethereum land right now. We were Series A and Series B investors in Celestia that just launched. They had a very successful launch. They're doing quite well right now. And we're excited to see sort of some of the roll-ups that are built on top of Celestia, but it's going to be a long road. It's like not going to be, like Rome wasn't built in a day, and we're like we're at the very beginning stages of what the modularity movement's going to look like.
Thank you. And as well, since we have so many blockchains, the final thing, who really adopts those blockchains, what apps are built on those blockchains, and the amount of transactions and so on. So definitely community plays a role here. So Michael, can you tell maybe from the perspective of the Hashgraph Association, what the role does the community play in the adoption and development of blockchain? And what brings the success to this or that blockchain?
Definitely. Well, I would say that the community gives the blockchain the credibility it needs to be adopted in the enterprise environment. Because if I go out and talk to an enterprise, if I can't show that there's an ecosystem underneath that will actually support my claims, then that enterprise will go somewhere else. And that's actually something that happens to every blockchain I work with over time, is that it's so important to have very vibrant ecosystems. A lot of the projects will fail, but the thing is that as long as it happens, as long as there's an sort of energy in the ecosystem, that will drive adoption on the enterprise layer. So, and that's one of the reasons I see what we discussed before here, the reason why we have more than one blockchain is quite easy, because if one enterprise invests in one, they need to keep that alive. And also, the other thing is that when you're looking at the real world, if you look at how many airlines do we have, how many brands of cars do we have, it's the same thing there. You will have a preference of choice for one blockchain because you find that the most interesting one, or you find that brand most appealing. This will be the same thing for the blockchains going forward as well.
Or you've made the most money on that one.
Yeah, well, could be. No, but I would say that that's the reason why we need to sort of have this, which I find so important, to have this developer experience, and to keep those, well, I usually say, we'll steal developers from each other, from different chains, but we need to go in and teach the younglings that this is the way forward, and that we need them, because this market's going to be huge, and yes, well, it really are, but now we're going out into the next bull market.
Thank you. Asim, what are your thoughts on that?
Yeah, so I think community is extremely important, and everybody knows Ethereum has the strongest community. And what we've seen is ecosystems who have struggled to build communities have started finding ways to bridge to try and access what Ethereum has. And some have done that, semi well, some not so well. But how do you build a community over time? There's a lot of aspects. There's having technology that resonates with developers. Making sure that people trust the network, whether it's things like open source initiatives, as well as providing, grant funding, which, has good points and bad points. There's been a lot of mercenary building with grants as well, where people build just because they were given grants, and hence that links again to the amount of money some of these infrastructure projects raised. So there's been a lot of burn, there's been a lot of waste, but I think that's all part of innovation. And it's the same with any startup environment where people try to find users, clients, developers. It's all the same. It's all about generating activity, and some succeed, some don't. And it's always going to be important when we link that to enterprises and things as well. I think even Ethereum has the most interest on that side of things. We talk about private blockchains and public blockchains, and a lot of people who are currently doing things on private is because they can't create those solutions yet on public. But the ultimate goal for many is to be on public blockchains. So it's going to be interesting because everyone wants to be where the activity is.
Thank you. Unfortunately, we ran out of time, but thank you everybody for a great discussion. And let's see in a few years what layer 1s and layer 2s will be still on top of the market.
Thank you, guys. These kind of panels are always very humbling for me. I've been in blockchain for 5 years, but I hear these experts talk about layer 1 and layer 2s and always learn something new. So now it's time for the one-on-one meetings. After that, there'll just be a little networking session, and then we start again tomorrow at 9 a.m. So no need to come back here. There won't be any closing remarks. Those that have one-on-one meetings, feel free to go, and please stay as well for the coffees. Meet, chat, connect, and we'll see you guys here tomorrow.